All right, there we go. Wait a minute. There we go. Oh, shoot. I was on the wrong screen. All right, what is up, everyone? Welcome back. Another day back in the AI Ponzi where our portfolio is going nuts today. I can't believe this. I mean, we're at pretty much, I think, a new all time high. We're up 4.6% on the day. Obviously, we can thank AMD Dizzle right there for that. AMD, we got a lot to talk about how circular this market is, how, I'll give a quick little breakdown. NVIDIA buys 100 billion of OpenAI. OpenAI buys a bunch of AMD chips and also takes a 10% stake in AMD. AMD's orders go up a bunch, which thus benefits OpenAI stock because OpenAI has a stake in AMD. Thus, NVIDIA goes up because NVIDIA owns 100 billion of OpenAI. I mean, this looks pretty circular. It's a pretty cool theory, but things look a little bubbly. I'd be careful with some of these valuations, but valuations aren't nuts. That's the thing. There's no catalyst to stop the rally right now. We could legit rally through the end of the decade. This could be the next roaring 20s. History does like to repeat itself. So yeah, this portfolio is going nuts today. We do have some losers though. I can't believe it. Sprouts Farmers Market continues to lose. Robinhood, dude, this is our best performing stock. We were up 1,000% on them earlier today, but now we're only up 960. How sad, right? But anyway, yeah, AMD and UiPath, I can't believe this. There's finally light at the end of the tunnel. If y'all don't know, we were down bad on this stock for the longest time. Look at this. We were buying shares look how long ago this goes back. I mean, we were buying shares at $50, $57, $60. I mean, we were buying shares at really expensive, but anyway, that's our Webull portfolio. Let me give you an update on some of my other portfolios. This right here is my Robinhood account. This is my this is actually my dividend portfolio. So once I buy a stock in here, every stock in here only pays a dividend. So here's my total percent change on every stock in here. Every stock in here is also in the S&P 500, but most of these are dividend growth companies where they have right now really low yields, but they make up for it in the stock price appreciation, but they do all pay a dividend. And yeah, here's my total percent change on every stock, and my largest holding is at the top there, CEG. Year to date, we're up 15%. Man, y'all remember the April dip? The April dip, I wish I bought more, we're down 14%. And now we're up 15. Someone just asked a great question. Why CEG over OCLO? OCLO is such in a bubble. We'll talk about that one in a minute. Hey, what up, KC? So here's also my Roth IRA, also at a new all-time high today. Let's go. We started our Roth IRA pretty much a year ago exactly, and here's our total percent change on every stock. InnoData just continues to win. I mean, look at it. I'm up 150. Pretty much all its gains I got from this stock came from this month. The stock is up 94% in the past month. In the past 5 years, they're up 2,500%. So I didn't mind buying that one at all-time highs. They just continue to win. We are down on a few companies in here like Wix.com. Man, Wix.com is doing trash. That's your vibe coding play. I'm actually looking to maybe. Josh said AMD made me so much money today. Yo, me too, my friend. AMD went up 26% on the day. I can't believe it. Congrats to every AMD shareholder out there. And then finally, I want to share with you my buy and never sell portfolio. This is our Moomoo account where once I buy a stock in here, I'm going to try and never sell it. So I literally do just never sell it. I don't trim profits. Like Comfort Systems at a new all-time high today, not taking any profits on anything. So yeah, it's kind of like an experiment. I'm just going to never sell anything in here. I got some Amazon shares as well. DocuSign, actually, they're up 5%. They just recently rallied on some partnership news. I think there was some partnership, I don't remember. But anyway, that was pretty cool. Someone said, why? So if you're looking at nuclear stocks, someone asked me, why did you pick CEG, this stock right here, over OCLO? And I'll tell you exactly why. I'll give you a quick update about this stock. This right here is Constellation Energy. This is the only nuclear stock that's viable in my opinion. Vistra Energy is a second, but they literally, out of all the U.S. nuclear reactors, okay, out of all the U.S.'s nuclear reactors, this company right here literally owns 30% of them. This is the largest pure play for nuclear. There is no close second. Second place would be Vistra Energy, ticker symbol VST. But yeah, they have 3 reactors. Constellation has 22. But someone said Oklo. Well, I just can't. This is a startup right here. They're also at an all-time high today because they're just following the momentum of the market right now. So congrats if you own this one. You're doing great. But here's why I can't trust this one. I mean, if we look at the revenue, it says no data because they've never sold anything. They've never sold a product or a service. This is a startup. They're trying to make these small modular reactors, these SMRs. And if you didn't know, there's only 3 working SMRs in the entire world, and none of them are in the US. So this is a pure like proof of concept stock. Like it's a $21 billion company that with no side of revenue. I think it's very risky. So that's why I picked Constellation Energy. Constellation Energy. What happens is, yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. This is a brokerage. But all right, let's get going here. Yeah, if you guys got any stocks I'm gonna look at, let me know. Someone said Autodesk, ADSK. I forget what this company does, but let's go figure it out. And they're actually at an all-time high. Wow, they've done really good. So let's go see what fundamentals they have. So this is in architectural engineering construction operations. Wow, look at the growth here. I mean, usually if you just look at the numbers, it usually explains like the stock is at an all-time high. It makes sense when you just look at their numbers. Like their main business is up 23% after going 15, after going 11. Like it just hits a new record every year, every quarter. All you're seeing is green over here. And look at this. The orange line is what the analysts are expecting them to report. And every quarter they're beating on expectations. They're beating on revenue. They beat on net income this quarter, and they beat on EBITDA by a good chunk. This is great news. So revenue's up 17. Like they're making a good 200 to 300 million. They had a little, one-time adjustment last quarter. It says the net income fell 39. It didn't actually. Operating profit was up 13. So cash from operations look great as well. So anyway, let's see. No dividend on this company, but that's all right. That's all right. Let's see here. Rich Tech Robotics. Yeah, hey, the thing is with this stock, I see this one really often. If you're looking for a robotics play, this one's a bit hard to trust in my opinion, but it has the momentum. Like right now in this market, this is when you kind of want to own this kind of stock, but you really want to swing trade this kind of company. I don't believe you should just buy and hold this one for the long run. They're a bit hard to trust. And just from a fundamental, like financial point of view, nothing, like they have no IP or patents, nothing registered. Like this is practically a startup. I mean, if we look at their revenue, it fell 18% year over year, and the revenue's only $1 million a quarter. Like I can't stress how like insignificant that is. $1 million of revenue a quarter, losing millions. So are analysts expecting any growth? Well, they're expecting 2 million, but they're missing every quarter on expectations. The momentum's real, but I'd be careful with that one. Just if you plan to buy and hold it, but if you plan to swing trade it, options or something, that would make more sense. But if you're just looking for a real robotics company to buy and hold forever, I'd pick a Symbiotic and Amazon. Why Amazon's not a pure play? They are the largest, best robotics play out there. Their factories are insane. Also, Symbiotic. So Walmart has a huge logistics hub robots. This is Symbiotic. They're kind of replicating this and they're helping out Walmart. Wow, this stock's also at a new all-time high. Would I rather buy Rich Tech Robotics at an all-time high or Symbiotic at an all-time high? Definitely this company right here. Because remember, we just looked, Rich Tech Robotics had 1 million of sales a quarter. Well, here's a company with real numbers, like real growth too. The revenue's up 25 after going 50. And this company has over 1,500 registered IP and patents. It's crazy. So that's what I love about this one. And also, I wanted to show you the shareholders. Their number one customer is Walmart. Walmart loved them so much that Walmart decided to take a stake into this company. Walmart owns 13.5% of all the shares. So if you own Walmart, you technically own a little bit of this company, but that's kind of the better robotics company, in my opinion, not financial advice, of course. Someone said I regret selling all my AMD shares. Oh, dude, AMD has been on fire today, and it's a bit circular. Check this out. We do own some AMD shares. We got 11 shares in them. They're now our top holding in here. But we're seeing things are looking a little circular right now. So why is AMD up 25%? Well, OpenAI just took a 10% stake in AMD, or like warrants. Basically, OpenAI is going to get 10% of all AMD shares, and they're also buying a bunch of AMD chips. So basically, this is how circular it is. NVIDIA, so this is NVIDIA, OpenAI, and AMD. NVIDIA buys 100 billion of OpenAI stock. Then OpenAI gets 10% of AMD shares. OpenAI buys a bunch of AMD chips. AMD gets a bunch of money, so AMD stock goes up. That means OpenAI goes up because they have AMD shares, and thus NVIDIA goes up because NVIDIA has a stake in OpenAI, which has a stake in AMD. So literally, NVIDIA benefits from AMD going up. Anyway, let me go to the analysis right here. So we're going to see some upward projections, most likely, to these estimates. First off, they've been beating nicely on these numbers. They beat every quarter on revenue. They beat a very nice chunk on net income this quarter. But this is, look at their market share right here. Obviously, we know they sell GPUs, data centers need GPUs, but yeah, they have a 17% PC GPU market share. But yeah, it's a huge data center play. You know, data centers need GPUs, and AMD happens to make their own GPUs, so they can supply them to their own data centers, kind of like what NVIDIA's doing. But check this out right here. They're no longer advanced money destroyer. Their growth is back. Revenue's up 31, and also the net income is up 229. The profits are slowly starting to rise up, like 11.35% net margin. That's good. And if we go to their balance sheet right here, they actually have no net debt. This is a really good balance sheet in my opinion. So anyway, yeah, the free cash flow as well, the FCF, yeah, anyway, that's my little rant on how circular things are. I wouldn't buy AMD here, like I wouldn't buy Oracle, but what I'm trying to say is there's no catalyst stop in this market. I mean, we could just rally through the end of the decade slowly, like roaring 20s all over again. So yeah, what broker is that? Oh yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Or what? I have all the apps linked up there. I don't know which one you're talking about, but yeah, I do have some AMD shares. Full disclosure, I might be biased, but yeah, I got 11 shares. Yeah, this is my risk on portfolio. We got a lot of risky names. Let's see, we're up 4.22%. I like being fully transparent. If you got any questions for me, let me know. But all time, we're only up 18.5% all time in here. We do have some losers in here. UiPath is actually up 15% today. So this used to be down 15% more before today. So that's good news at least. But yeah. All right, let's see here. Take Two, please. All right, Take Two. Okay, that is the company that owns GTA 5, Rockstar Games. So if you've heard of, Red Dead Redemption, GTA 5, this is the company that owns that. And this company's in a unique position where they are literally about to release a game. You've probably heard of it, GTA 6. They're about to release this game. Now, as soon as they release it, it's literally going to bring them in billions of revenue. Like, there's so much future growth expected in their earnings. So that's why the stock is rallying up, anticipating that huge growth. But here's the thing. I think at this point, all investors know this. So I think it's mostly priced in. The risk reward doesn't look great buying this one at all-time highs, but I can't understand why it's at all-time highs. I can't wait to see what GTA 6 does with their numbers. All right, let's see here. AMD went crazy? Yeah, sure did, dude. That was nuts. Like 20, it was up like 30% earlier in the pre-market. Yeah, let me pull up AMD. Yeah, AMD right now is up 25%, and so we're up 66%. Also, other stocks are having a great day. UiPath is up 15, SoFi's up 6, Supermicro's up 6. Supermicro gets shout-outs from AMD and NVIDIA to install their chips for you. A lot of these other stocks are up. And of course, we got some losers like P6, Sprouts Farmers. Hey, trust thy word. Hey, what up, dude? Thanks for all the roses there. Let's see. Expanding Navy, 19 ships per year. Under his budget, this could. Or hey, if you got a stock you can look at, let me know. Trust. What's up, dude? Improve HII. Or hey, wait, is that the stock you want to look at? All right, so let's see. Let's look at HII. All right. Then we'll look at Then we can look at Nebius and Intel, some of these other chip names. So yeah, here's Huntington Ingalls Industries. The stock is at an all-time high if we really zoom out here, so that's good news. They're an $11 billion company, and they're only trading at, let me check the PE. Wait, their PE is a 21, so they're only trading at 21 times net income. That seems pretty fair. Oh, this is the company that makes those submarines. Yeah, I remember this company. You're right. Yeah, this is the company that makes those submarines. And that's why you were talking about the Navy fleet expansion. That makes more sense. So yeah, this one is your, I guess, like submarine type play. And Navy defense contract play. They're making good money even right now. Over $100 million of after-tax net income a quarter. The revenue is a bit slow right now, 3.5%, but the stock is still at an all-time high. That's because maybe it's anticipating those orders. A lot of the the defense companies have been doing really good. I guess they're not so much aerospace. You think it'll bring it up? Yeah, that makes a lot of sense. They're trading at a fair valuation too, but it's because the thing is low. Hey, what up, Steven? He said KOPN. Let's see here. And what up, Juan? He said, sup, man? Hey, what up, Juan? Hope you're having a great Monday. Let's see. This is Kopin right here. If you look at the top right, this is a $570 million company. So they have a pretty small market cap. They're actually the same price as they were back in 1998. So you bought the stock back then. You're slightly down on your position. But let's see what they do. Ooh, so this isn't great news. The revenue's down 31%. And The revenue is only 8.4 million, and yeah, they're losing a couple mil a quarter on that. But yeah, the sales are down 31%. That's not great. They did deleverage like their balance sheet. Like, I wonder if they issued something. Oh, they did. Oh, anyway, nothing's really blowing me away here. There's some sort of momentum today. The stock's up 25%. I'm not sure if there's any specific news here. Copen amends stock agreement. Wait, that's not today. Yeah, that was 3 days ago. That one's a momentum play. The fundamentals don't look too great there. Do NVIDIA stock. Yeah, let's do NVIDIA right here. So NVIDIA, this one's down 1% on the day. You know, NVIDIA should now benefit from AMD going up because of their stake in OpenAI, because OpenAI has a stake in AMD, and OpenAI just put a bunch of orders in AMD. So that should make NVIDIA go up. But I do like NVIDIA, you know, great, just never sell chip play, 20% PC GPU market share. They also have this little automotive software that like really does compete with Teslas that anyone can basically just license from them. Pretty much open source almost via money. But yeah, NVIDIA is basically a data center play at this point, like in the chips. But this is crazy growth and crazy margins they have. If we look at the revenue's up 55% after going 122, after going 100. So the growth has been insane. But look, they did 46 billion in revenue. Out of this 46 billion in revenue, 26 billion of it was after-tax net income for them. The margins are ridiculous. 56% net margin on NVIDIA. You know, they just took a stake into Intel. They have a stake in OpenAI, which has a stake in AMD. Like, it's so crazy. Do you think NVIDIA will buy back shares? Yeah, didn't NVIDIA commit to 60 billion in buybacks or something like that? And they did a little $5 billion investment in Intel. We actually have not looked at AMD yet. Or wait, you know, we did look at AMD, but we'll look at them in a little bit because that's kind of the big news today. So I don't mind looking at them a couple of times. NVO. Yeah, hey, that's Novo Nordisk right here. This is your weight loss play. So if you're looking for, this is the company that owns Ozempic. So if you've heard of that, you know, Elon Musk is on Ozempic. They also own Wegovy. They're the weight loss companies. And literally 93% of all this company's sales are just their diabetes and obesity care products. So it's a weight loss play, and they're making good money right now. Insane money, matter of fact. You know, over $4 billion of net income a quarter. They have a 3% dividend yield. But if you're wondering, like, great fundamentals, why is the stock declining? That's because when I read the Morningstar report research on this, Morningstar research, their patent actually expires for Ozempic in a couple years, so they're losing that exclusivity. They're also seeing some increased competition from Ozempic, Eli Lilly, Zepbound, and Pfizer's working on a new one. Or they just so. The growth is, I think it's worth nibbling on. I think it's priced in there. What happens is, hey, if you want to get this app I'm on, Jace, it's in the link tree in my bio, the very first link there. Comfort Systems is up $16 today. Oh, heck yeah, dude, check that out. That's actually my largest holding out of all the stocks that I own. This is my largest holding, Comfort Systems. Nebius. Hey, East Meat. Thank you so much for the roast there. I appreciate that. Great info. Oh, hey, I really appreciate that. Thanks for the kind words. So someone said Nebius, or Ruben said Nebius stock. Hey, remind me to look at some of these other ones like PRSO. Sorry if I don't get to all the stocks. I do try and get to all of them. I try and go quick. But this one's in the NVIDIA portfolio. You know, NVIDIA is so big, they own some individual companies, or they own, you know, little positions in them. And one of the stocks they have a big position in is in Nebius. And Nebius just got a huge deal with Microsoft. Microsoft signs a $19.4 billion AI computing partnership with Nebius. So that's really why the stock has rallied up the past couple months. That's why they gapped up on this day with no earnings. It was that news, and they've just been up ever since. And I wouldn't just buy a stock because NVIDIA owns it. You know, go do your own research on it. And looking at this one's fundamentals, I mean, this is great news. I mean, revenue's up, the revenue's up to 100 million, up from 14 million. So that's incredible growth. And it's 100 million this quarter. Analysts are expecting in 2 quarters, 265 million. Like, the growth is insane. It's like, that's a pure growth company. What is that stock called? Super something, the AMD? Oh, you're talking about the server installer. Yeah, AMD doesn't use them. Data centers use them to install the AMD chips. But this is super microcomputer. I don't love it. It's actually 10 to 15% overvalued. I wouldn't touch it here just because their margins are collapsing. They're seeing increased competition from Dell. But yeah, that's super microcomputer. They get, like, NVIDIA loves them to install Blackwell chips for people. Anyway, hey, what up, Jojo? Good to see you, man. Hey, thanks for the gift there. I appreciate that. All right. Someone said, what do you think of Kratos? Yeah, hey, this is a government contract defense company, and they're at an all-time high right now. This one's done incredible. So check this out right here. Honestly, this valuation's a little nutty. They don't deserve to be at this high, but it kind of makes sense. They beat on expectations like crazy. They negotiated higher pricing for their government contracts. And look at this. The analyst only expected 305 mil. And they reported 350 mil. No wonder they're rallying up so much on their earnings report because they beat like crazy versus what the analysts expected. They beat on revenue, they beat on net income, and they're also profitable every quarter. But the profits are very low. So that's why the PE is so expensive. The multiple is too expensive to pay, to be honest, especially now, but they're interesting. I like the growth on them. Reddit has been in the trenches over the past week or so. So, yeah, if you want to know the truth about Reddit, one of the reasons why they fell is because OpenAI. So, yeah, look at this. ChatGPT's citation of Reddit drops to 2% from 14%. So, yeah. That's why the stock, it's just bad sentiment right now. The earnings are great though. I can't wait for the next earnings report. Like this earnings report right here was absolute gangbuster earnings, like actually game changing, beat my expectations by crazy and every analyst's expectations like crazy. Like if we look at the orange line, this is what the analysts expect. They beat on revenue like crazy. They beat on net income by over double. EPS is net income. They beat by over double and by over triple on EBITDA. Like it really was a great quarter and with good guidance. Their ARPU, their average revenue per user is up 48% year over year. So they're making 48% more money per user than the same time last year. And hey, Jojo, dude, with the hand heart, thank you so much, Jojo. If you got a stock you want me to look at, let me know. I really do appreciate that. Hope you're having a great Monday. So yeah, the revenue is crazy. Revenue's up 77 after going 50. And their net income positive every quarter. Again, the net income beat by double versus what analysts expected. And they have a freaking fortress of a balance sheet. They literally have no debt whatsoever, completely debt free, over $2 billion of cash. The free cash flow is also like this is a growth stock. Ignore the name Reddit. A lot of people don't take them serious because the name's Reddit, but I take them serious because these are good numbers. Like the in growth is crazy here. Would I buy them here? No. Under 200, I'd nibble on them a little more. But I do own Reddit, by the way. I'm totally biased. Let me see here. I got 4 shares of Reddit. We're up 115% on them. So yeah. Okay. Can you look at HIMS? Okay, we'll look at this company. So one reason why this stock has been hurting because they lost their partnership with Ozempic. So they used to sell Ozempic, a weight loss prescription, on their website, and that's what led to a lot of the growth. This is insane growth right here that they've had. Revenue's up 72 after going 52 after going 83. Like the streak continues. But analysts are a little worried that because a lot of this growth came from them selling their weight loss prescription, they just don't sell that anymore on their website. So I believe they've been trying to find some new partners to like sell it again, but they're not going to get the same margin that they used to. They actually missed on expectations this quarter on revenue, but this is still a good company. Like the numbers are still great here. Like they're making good, like 40 to 50 mil in net income a quarter. The growth is nice, up 72 after 51. But again, we want some more clarity on how the growth is going to be in the future because they did miss on expectations. All right. But I do overall like them. They did issue debt this quarter, but it's not the end of the world. Maybe they're going to use it for a good purpose. Hey, what up, Joel? Have you heard about Archer Aviation and the Tesla partner? No, I actually haven't. Is that true? Let's see here. I believe this is some sort of like Uber type stock, or no, I don't remember. I'm not seeing any news on that, but I believe you. But again, that's actually good news because I believe this is a startup. Like if you go to the revenue, yeah. So if you go to this company's revenue right here, like on Archer Aviation, it says no data because this is a startup. You know, they've never sold anything, not a product or a service, and they're losing, a couple hundred mil a quarter. But that's potentially good news if they're partnering with Tesla. So that's a big momentum play right now. You're paying for a lot of future uncertainty, I will say, because it's just literally a revenue-less company. You don't have any insight on what the net income or anything. I missed the article. Oh no, my bad. Oops. Okay. I believe Resolve AI will hit $40 because of a strategic Google partnership. Oh, hey, you see, you have a good reason there. Improvement. It's good to have an actual thesis, you know. Who will be the first famous person to own private Archer Aviation that can show off Elon Musk? What a day so far, Tech. Hey, yeah. Hey, what up, Charles? Yeah, hope you're doing good, man. We're having a great day today, mainly from AMD. If we go to our tech heavy portfolio, we're up 4% on the day in here, and all time we're up 18% in here. UiPath is up 15, AMD 25, SoFi's up 5.4. So a lot of these names are green, but I think our Robinhood portfolio might be red on the day, just slightly, or please go green. Let's see. Oh, we're green on the day. Let's go. We're up 0.22%. These are all the stocks that we own in here. By the way, this is our dividend-only portfolio. Every stock in here pays a dividend. It looks like Google. Man, I remember Google this morning. I watched them in the pre-market. They were down 0.6, and now they're at a new, look at that, intraday high as we speak. That's crazy. I love Google. Here's my total percent change in every stock. But anyway, let me stop with the portfolio update. Let's keep going. Let's see. I saw the stock Aurora Aviation. Yeah, that's another kind of art. That's the same thing as Archer Aviation. These are two similar companies. Here's Aurora Aviation. Let me see. AUR. Pretty sure they do exactly what they do. They're both startups. Like, I'm pretty sure if we go to the revenue right here, we saw Archer Aviation on no revenue. Well, they did $1 million this quarter. Hey. So they did $1 million in sales this quarter, but they also burned money, like literally losing 200 mil a quarter. I think it's just hard to trust these again. No sales, burning through money. You're paying for a lot of future, paying for the future there. AAPL. Ooh, let's see here. Apple. I love this stock right here. What up, Isaiah? You saw AMD? Yeah, man. I certainly saw AMD. Should we look at their fundamentals? Let me know if y'all want me to. But here's Apple right here. They're at an all-time high. This is a perfect buy and never sell stock. If you just have the intention to never sell, this one's, one you'd want to do that. It's even worth maybe nibbling on right here. I wouldn't load the boat on them here. Little premium, but yeah, check out their smartphone market share, 17% smartphone market share. Literally half of all Apple sales come from their iPhone sales, but the most valuable part of Apple is actually their services. So if you go spend $100 in the App Store on gems or something, Clash of Clans gems, $30 of that goes back to the Apple parent company as a legit royalty, a super high margin royalty, way more. It actually breaks down the different margins here, but a way higher margin than double the margin of their, hardware. iPhone is hardware. This is their software, taking that margin whenever in the App Store. Then they have the Mac sales, the wearables like the AirPods and the watches, and then the iPad. And here's also why Apple's affected by tariffs, which tariffs have kind of gone away. That's what we've seen this rally, but only 36% of Apple's revenue comes from the US. Everyone around the world loves Apple's devices. 26% comes from Europe, 17% China, rest in Japan, all these other countries. And they print money, legit $25 billion in net income a quarter. No chance Apple's going bankrupt. Like, this is one of the companies, like, you just can't lose everything. Like, maybe you'll lose 50% or something if, like, the world ends, but like, you can't lose 100% of your money. Like, maybe anyway, Apple's a good buy, never sell company. I think the third largest holding in the S&P 500. Klarna, hey, that's the buy now pay later stock. They just IPO'd. Someone said, what app are you using? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But here, it's a brokerage. But here's Klarna. This is that buy now pay later stock, and they just IPO'd, so we don't get too much history on the data. But we can see is that revenue's up 21%. Last quarter is up 9%. And hey, Hill Dorset, dude, thanks for the gifts there. I really appreciate that. Everything seems to be popping. I hate selling, but it feels like I should take some profit. I agree, Hill. So that's why, like, you should take profit, but like the smallest bit of profit, like less than like something, an almost insignificant amount of profit. So it'll make you feel better. But yeah, or maybe here's what I'm doing right now. Instead of just putting new money in the market, instead of investing the typical like couple hundred I do a month, I'll only maybe put in 100 and keep a little more in my cash pile. So yeah, that's why if you look at the middle, I'm going to have 1,100 of cash. At least it earns you daily interest, so that's what's cool. But honestly, we were talking about Klarna. I like as a better play. And again, these will get smoked in a recession. People just won't pay back these loans. But here's another buy now, pay later stock that's maybe arguably better. Maybe heard of them before, but they're really growthy, actually more growthy than Klarna. Revenue's up 32 after it grew 47, after it grew 37, like Streak continues. There's no red numbers, and they're not just making revenue, but now they're profitable. For the past 3 quarters, they made net income. If we zoom out, they kind of used to lose net income every quarter. So they've really turned things around, which is really nice on a firm. Hey, what up, Johnny? He said Grab. Heck yeah, let's do Grab right there. Shout out to Johnny. So Grab Holdings, this right here, this is international Uber pretty much. So if you're wondering what this company does, literally they do exactly what Uber does, but in all these other countries. Notice the US and Canada aren't on here. They're in Malaysia, Indonesia, Singapore. So it's kind of like an international play if you want exposure to maybe different currencies, different countries. And, it's a commodity. Uber is a proven thing that people use. And no matter the country, really, people got to go places. So it seems like a good business model. And it's not just that. Uber believed in them so much that Uber decided to buy the company. They're the largest shareholder. Uber owns 13% of all the shares. Toyota Motor owns 5.5% of all the shares. They're making net income every quarter for the past year. They're making free cash flow every quarter. And let me check out the analyst expectations real quick. Yeah, look at that. They beat on expectations this quarter, and look at how high that's great news. Revenue is supposed to, maybe one day it's going to be over $1 billion a quarter. Grab is really interesting. Backed by Toyota and, hey, thanks, Hill. I appreciate that. Hey, thanks for the gifts too. The pumpkin pie. Hey, let's see here. Check out Intel. Okay, we'll look at Intel. So Intel, this one, I wouldn't really be talking about them if the government and NVIDIA didn't take a stake into them. So one reason why the stock has rallied up so much is because, there was no earnings. It's because the government now owns 10% of this company. Wait, Intel rival AMD forms strategic partnership with OpenAI. Oh, yeah, we know that. Oh yeah, so there's also a little rumor that Apple is sniffing, also taking a stake in Intel because Apple, promised, 100 billion or was it 300 billion of investment into the U.S. One way they could do that is via buying some Intel shares, and I think regulators would allow it. NVIDIA took a stake in them. NVIDIA, as you know, they just design their chips. All their chips are actually manufactured in Taiwan by Taiwan Semiconductors, but which is 6 feet away from China. We can't defend that, so we're really trying to move our manufacturing to America and be more independent in case we do get those war fears, especially with these escalating tariff fears poking everyone with a stick. So what's probably going to happen is NVIDIA is going to move some of their older chip manufacturing to Intel. And the government, so good sentiment for them. Wouldn't even be talking about them if Intel or if government and NVIDIA didn't take a stake. Mike said, check out LRCX. Is that Lam Research? Yo, this is another great play. Wow, they're at all-time highs, dude. They deserve to be at all-time highs. I should have bought this one. I regret it, but you get a nice yield. I remember this one had an over 1% dividend yield before, and the PE is still, kind of fair, 36 times PE. Let's see down here. Wow. Check out the growth. I mean, this is why the stock is at an all-time highs. They're not just at all-time highs because of momentum. Lam Research is at all-time highs because they have good growing fundamentals. If we look at the revenue's up 33% after it grew 20%. And if we look at the net income, wait, look at that. Hold on. Revenue is up by 33, but net income was up by 69. So that means they're expanding net margins. They had a 33% net margin. It's never been above that before. So this company's just headed back in the right direction. So I can see why they're at all-time highs. Same AMD as well, with the AMD news as well. AMD was up 25% of the day. A lot of the chip plays, that sent up Supermicro. The whole AI ecosystem is going to benefit, from the nuclear reactors that power them to the HVACs that cool the servers down. I try to own the whole AI ecosystem. So the copper cables, that Amphenol supplies to NVIDIA. Let's see here. I just saw AMD. If you don't mind, can you explain the recent upward movement? So yeah, I'll be really quick about this again. So basically, AMD just got a huge order from OpenAI, which owns ChatGPT. So OpenAI also took a 10% stake in AMD. So OpenAI owns 10% of AMD, but also OpenAI is buying a bunch of AMD chips, and that's going to send AMD stock up. And also, if y'all don't remember, NVIDIA took a $100 billion stake into OpenAI. So literally AMD stock going up makes OpenAI stock goes up because they have AMD shares, 10% of AMD. But also NVIDIA owns shares of OpenAI. So NVIDIA literally benefits from AMD going up. We're seeing a really circular market right now that may be a little bubbly, but it's a cool little thesis that but anyway, AMD, they should the guidance estimates should get revised up. Like first off, orange lines what the analysts expect. They're already every quarter beating on expectations, beating on revenue, beating on net income. And so I can't wait to see what the future holds. They have no net debt. They're making good net income every quarter. And especially with this new OpenAI order, that's going to bring even more money to them. The free cash flow, that's what FCF stands for. They made 1.7 billion of free cash flow. Like they're already, and the valuation isn't too nutty. Like that's the crazy part. I want to buy them here though, for sure. Hey, what up, Jay Rich PN? Good to see you, man. So Mikey said PFE Pfizer. So this is a company that a lot of people like for the dividend because again, you're not really going to outperform in the long run with this stock. If you bought Pfizer stock in 1998, all right, if you bought Pfizer in 1998, you're down on your position. So, but here's why people like them. You get a crazy yield, a 6.4% dividend yield with this company. Here's how we can tell if the dividend is safe. I will say the dividend wasn't safe a year ago. Look at this. They were, when you lose net income, you can't afford to pay a dividend. But things are starting to get a little bit more consistent, and we've seen some more clarity with the EPS expectations. So they should be able to afford the dividend from now on every quarter. But check this out. In the most recent quarter, they made $2.93 billion in net income. I'll just show you the numbers exactly. They made $2.93 billion, and the dividend cost $2.45 billion. So they actually had a little $500 million of leftover money after that. So as long as they're making a good chunk over $2.45 billion, the dividend is really safe here. But again, not a stock I really expect to outperform in the long run. Pretty much buy it to maximize your income. Why isn't Nvidia popping off with everyone else? I think they'll slowly rally up. AMD is making me very happy. Yeah, me too. We're up 25% on our AMD shares today. UiPath is up on an OpenAI partnership. SoFi's up a little bit. We do have some losers, sadly. Sprouts Farmers Market continues to be a loser. We're down 23% on them. Actually, Progressive Corp looks like an interesting buy right now, I will say. But anyway, let's keep going here. Yeah, here's our total. Again, I like being fully transparent. I feel like no other streamers show this or anything. Like I go to a bunch of other TikTok lives and no one ever shares their portfolio, their lifetime performance. And also, by the way, I sell nothing. I have no course, book, private WhatsApp, Telegram. I literally have none of that. So please watch out for people impersonating me. I sell nothing. But if you do want to support me, best way to support me is just hit the follow button. We stream every single day. If you want to check and if you want to check out my YouTube channel as well. Someone said QuantumScape, QS. I believe this is one of the rare earth plays, and I think the government might have taken a stake into this company. I don't know. QuantumScape and Corning form strategic partnership. GLW stock has done incredible, so they actually have a really nice partner. Well, let me see, do they have revenue though? So yeah, like I thought. If we go to the revenue right here, it says no data because they've never sold anything. They've never sold a product or a service. And they lose $100 million in net income a quarter. But yeah, look, whenever you lose $100 million in net income a quarter, that money has to come from somewhere. So that's why the balance sheet slowly the assets tick down every quarter. But they can afford these net income losses for the meantime. We want to finally see them start to sell something. I think they have like a rare earth mine or something. What app is this? So yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Koza said, what's your account? I'll give you a follow. Oh, yeah. If you want to give me a follow on this app, here's my account. It's just Nathan Robert. Oh, yeah. What's cool about this, you can display your paper folio that's like with fake money. My paper folio hasn't done too well, but and yeah, if you want to follow me on, I love this app. It's my favorite brokerage, by the way. I have also Webull. I have all these apps I'm using are all in the link tree in my bio, but my favorite one, most useful brokerage is this one right here. Yeah, link tree in bio, first link. It's affiliate link, full disclosure. But Jamal said Super Microcomputer. So this is a company I do like. I do own them. I'm up over 100% on them, but I wouldn't actually buy them. They're with the new AMD news, with the Oracle doing opening up 37 new data, or was it 27 new data centers? They're getting Super Micro to install the GPUs for them. So, but here's one thing that concerns me. They're in such a competitive space. Dell's doing what they do now, so they've been losing their pricing power. This is the good news. The revenue is up by 7.5. So sales are growing, revenue's up by 7, but the net income, their profits are down by 34% year over year. What does that mean in English? Basically means the net margins are collapsing. Look at these year over year declines on the margins. Margins are down 40 percentages of 3.39. It's tough. So that's the one reason I'm avoiding Supermicro, or at least adding to my position. I'm up a crazy amount on them because we bought them during the what's that called? The fear. Actually, They're accounting fraud fear. So look at this right here. This was a crazy day. Supermicro was supposed to report earnings this day. It was crazy. They were supposed to report earnings, but the earnings report never came out. So then I shortly bought shares after, and now I just have 10 shares left. But they also have that $10 billion partnership with DataVolt, which is cool. Anyway, but I would be careful. I wouldn't buy them here. Hey, Cass, yo, thanks for all the gifts there earlier, Cass. He said, can we do Adobe? Yeah, so, yo, this is the company that owns Photoshop, After Effects, and I'm on Photoshop and After Effects near every day. You know, Adobe was the company that invented the PDF, and then they open sourced it. If you ever used a .pdf, you can thank Adobe because they literally created that and made it open source for everyone to use. But anyway, what app is that? Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. But one reason why Adobe has really been struggling recently is because of the AI thesis. They're saying, you know, people are creating incredible logos in ChatGPT like that don't look AI generated. Like, will we need Photoshop in 10 years from now? I think they've overpriced in this fear. I think it's fully priced in at this point. Like, I always think humans are going to need the last touch for art. You know, I'm not an expert, but I think they'll slowly unprice it from an AI loser to an AI winner, especially because the low multiple and the buybacks. I think if this company also just does some sort of acquisition, if Adobe buys a company, like, which they can easily afford to do because they don't pay a dividend and spend like $2 billion on buybacks a quarter, could change the whole sentiment of the stocks in this to 450. I don't trust it too much to have this as like 10% of my portfolio, but what I nibble on it here is like a small little position, you know, probably. I do like this company. I use their products. Well, actually, don't tell anyone. I have the hacked version of Photoshop. but check this out right here. They make good money. And pretty much 1.7 billion of after-tax net income a quarter. What is Adobe doing with all this money since they don't pay a dividend and they're not acquiring any business? Well, they're deploying it in share buybacks. This is insane. At the top here, they're literally spending 2 to 3 billion in net income a quarter on share buybacks. But what does that mean? Why are buybacks so important? Well, check this out. If you go to the net income is up by 5% year over year. But the net income per share is up by 11% year over year because the share part of the ratio went down so much. That forces the PE ratio to go down. It makes the EPS go up. It literally gives you more ownership in the company. Buying back their own shares, like in short, forces the stock to go up. So yeah. What app are you using? Hey, again, by the way, this is where you buy stocks on. It's called a brokerage. If you want to get this software I'm on, it's in the link tree in my bio, the very first link there. So GLW Corning. Oh yeah, hey, 47. My bad here. For everyone on the YouTube stream, I'm streaming on YouTube and TikTok. For y'all on the YouTube stream, if you go to the description, the link tree is there. I put it in the chat. But anyway, what was that? GLW. Okay, this is the company that has really been benefiting from AI, their networking business, kind of like Amphenol. So check this out right here. If we go to their main business, their optical communications, this one has been growing nicely the past couple quarters. You know, it's up 40%. The last quarter is up 45, 51. So the past couple quarters have beat like crazy, and they just beat on their actual expectations. Like, usually if you just look at the analyst expectations versus what they reported, it usually explains why the stock is doing really good. You know, just a quick glance at their numbers, like this orange line's what analysts expect blended, you know, huge beat on revenue, huge beat on net income, huge beat on EBITDA this quarter. It was a triple beat quarter. I'm not shocked to see this company at all-time high. Revenue's up 18. Again, was a big beat versus what the analysts thought. Revenue's up 18. Net income. Wow, look at the profits are, and that was real. They really made 500 million net income this quarter. So actually, they should be making in the future, like probably they're probably making $2 billion a year. And what's the market cap on that? Forward, let me do a quick forward PE. Ooh, so they're trading at a forward PE of 40, in my opinion. Actually, maybe I'm not being generous enough. What is McLaren Resources? Hey, if you give me the ticker symbol, this AI startup will be monopolized, big corporations, AMD. Yeah. Thoughts on PayPal? So PayPal, this one's a tough one because I don't know if I really expect this one to outperform in the long run. Like, PayPal's the same price that it was back in 2017, and they don't pay a dividend either. But check this out. They're trading at 15 times net income. They're trading at like a commodity multiple where they're not really expected to create or lose you any value because the growth has slowed down a bit. Like, if you look at the revenue, it's like mid to low single digits. You know, this quarter, the revenue is up 5% year over year. Last quarter, the revenue is only up 1% year over year. Like, we kind of want to see more growth to the revenue, but here's the good news. You know, PayPal still makes good money. They're making pretty much a billion, over $1 billion in net income a quarter. What's PayPal doing with all that money right now? I can't believe how much share buybacks they're doing. You won't believe this. You ready? Net income's up by, 12. Net income per share is up by 19. You own literally 8% of the company just in the past year, and they bought back like 3% of the company the year before. Like literally just in the past 2 years, you own 15% more of the company than you did a year ago. They bought back 15% of all the shares. Like PayPal's a buyback play. They're smart. They know what they're doing right here. They were planning on maybe doing a dividend, but they're like, nah, let's just deploy it on share buybacks. So that's really the main thing. Thanks for doing Adobe. Subscribe to your YouTube. Hey, Cass, dude, thank you very much. Yo, the number one way to support me is just subscribe to my YouTube channel. I'm trying to build up my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but just type into YouTube Nathan Robert. I'm also streaming on there. You can, sometimes I talk too fast. You can watch it on the replay. And by the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, never DM you. Watch out for people impersonating me. But someone said, can we look at, is SoFi a buy? Yo, I don't think SoFi is a buy today, but this is one that I won't be surprised if they just continue to win and continue to climb higher, because they're not just propped up on momentum right now. Like Rich Tech Robotics, some of these other names right here, they're at all-time highs because of momentum. Like a lot of the quantum names are all at all-time highs because of momentum. But SoFi's at all-time highs because of their good growing fundamentals, beating on analyst expectations. Like check this out. SoFi's a fintech. They have their own banking charter. They got it through a loophole that's patched because of them. If we go to their financial services right here, this is the reason they have a high PE. No one expected this growth. Like I bought this stock 2 years ago. If you would have told me the revenue would have increased 105% year over year after it grew 80, after it grew 222, after it grew 260, like it just continues to grow at this insane rate. Like I wouldn't believe it. They're beating on every expectation. So the financial services are booming at a new record. Their lending revenue is up 30% year over year, also to a new record again. Every quarter, beat on expectations. They're beating on EPS. They're beating on EBITDA. And I really just think people are taking SoFi serious. They did 850 mil of revenue. Out of the 850 mil of revenue, they made 100 mil in net income. They're profitable every quarter. So with all that being said, full disclosure, I'm totally biased. I don't have much shares. I have 24 shares. This is a stock I regret every share I've ever sold on. I have 24 shares left, but yeah, we bought SoFi, or I remember it was right here is when we bought all our SoFi, and we've kind of just been chilling ever since. So yeah. All right, let's see here. What app is it? Oh yeah, hey, if you want to get any of these apps I'm on, these are all brokerages right here where you buy stocks on. If you want to get it, I'm not sure which one you're talking about, but they're all in the link tree in my bio. This one right here is for analysis. The one I've been using is the link tree in my bio, the very first link. This is my favorite one. So, thoughts on Walmart since they added gas pumps to their service. Well, I know what's that called? Not Costco. Sam's Club has like a cool, like good deals on their gas network. But anyway, Walmart, I love them for Sam's Club. This is a great buy and never sell stock. This was actually the best perform. Walmart and McDonald's are looked at as recession-proof, recession-resilient. Like they were the best two performing stocks in the S&P 500 during 2008. Like they print money. I mean, look at this. They're doing like pretty much $5 billion in net income every quarter. It's very consistent. $5 billion net income a quarter, and you get a near 1% dividend yield. They do share buybacks as well. And I like that they're getting into Sam's Club. It's a good business model. You have to have a subscription to get into the store, and whether you go to the store or not, they still collect that subscription revenue. And customers don't mind it because whenever you buy stuff there, you're buying in bulk, and you do get a good deal on the stuff you buy. And they have the loss leaders as well, like the $1.50 hot dog, the rotisserie chicken. So yeah, I like Costco as well. I think Walmart's a bit maybe better value than Costco. Their private brands are huge as well, like Kirkland's. Kirkland's brand to Costco, so valuable. Their private label. Same with Walmart. Okay, we can't talk about DK&G. That's unfortunately a sector we just can't cover. But to be honest with you, I'll just tell you the numbers here. They're being out-innovated. Robinhood literally does exactly what this company does at this point. This is I can't say this word on here because last time I did, I got in trouble on TikTok. But anyway, they've just been struggling to make consistent net income. They made net income this quarter, but all the other quarters, it's only this quarter of the year when they make money. So we hopefully want to see them make more consistent profits. There's also certain states are hiking taxes on this industry. So really, I feel like that stock is really being out-innovated by Robinhood, which now does the same kind of prediction market, exact same thing. And this now, the reason Robinhood stock is at an all-time high is because Robinhood CEO said that there's now been over 4 billion contracts used on them. And that's where they make their high margins. So yeah, don't love that industry, to be honest with you. Why Reddit? Dude, Reddit, I picked Reddit stock because of their good growing fundamentals. Is UPS still a bad buy? I just don't love UPS. It's yeah, honestly, yeah, UPS isn't a good buy in my opinion. Like honestly, looking at their financials, this is the kind of stock that sadly might continue to go lower. And I'll just show you the numbers for yourself and you can draw your own conclusion. And by the way, hey, user73, thanks so much for the 11 roses there. I very much appreciate that. But yeah, here's UPS right here. I think this one might be a dividend trap. What does that mean? It means they have an unsustainable dividend. A lot of people see this like, wow, a 7.55% dividend. That would be great if sustainable. But here's the thing. Oh yeah, their average revenue per parcel is down by 6% year over year. That wasn't great. But look at this. We look at the lifeblood of the company, the revenue, the sales. The sales are down 2.7% year over year. You know, add inflation to that, like this just isn't a growthy business. They're being out innovated by Amazon. You know, Amazon's such a great stock. Amazon's a UPS, a Walmart, an Oracle, an Instacart all in one, a robotics play. So anyway, I'd rather buy Amazon stock than this. But look, revenue's down 2.7, but I saw someone earlier, but like they're still making a lot of net income every quarter. Well, actually, no. So check this out. Yeah, they made 1.28 billion in net income this quarter, but they actually lost money. Here's how. Remember how they have to pay a dividend? Remember, they just made 1.28 billion in net income. The dividend cost 1.35 billion of net income every quarter. So this quarter, they're in the hole by negative 150 million, and especially more this quarter. So unless they really ramp things up and start growing their sales and net income, you know, I sadly might think this one might be the kind of stock to just continue to slowly go lower. They're again just kind of being out innovated by Amazon, and yeah. Hey, what up, Lino? Hey, yeah, I love Amazon. Yeah, what are options? You know, they're just conscious. I don't do options, by the way. Great question there, Looney. And hey, the homie Nathan. What up, Nathan? Good to see you, my friend. We got the same name. He said plug stock. Unfortunately, I don't love the EV charging stocks, but they've been on some crazy momentum recently. So congrats if you own this one before today. So that's crazy. Let's actually check out the numbers though. So they're a $4.9 billion company. You know, that's after the past week of the crazy rallies. Here's the one thing that scares me away from these stocks. Again, they're selling people electricity to charge a car. It's a commodity. I don't know, like when they get profitable, I'm not sure how much net margin they will have. But this is the thing, like they burn money. They lost 200 mil this quarter, 200 mil last quarter, 1.3 billion the previous quarter, 200 mil. And just for eternity, this company is kind of just sadly just burned money. And they've been diluting you at all-time lows. But there's some good news. I wonder what the news is. I wonder if we can actually go to the weekly AI news. Plug Power delivers 10 electrolyzer array. Anyway, it's tough because of the net income losses, but I do like the growth on them. But after, yeah, ChargePoint. Oh, dude. You know, if you guys are wondering why I hate the charging companies, it's because I lost like over $1,000 on ChargePoint. I learned more about the industry. It's just not like, here's actually, look, the stock is at all-time lows today. Look at where I sold it. If I zoom in, it should show me my sell order. I sold all my shares right here on this candle. And thank goodness I sold all my shares on that day because and here's where I bought it. You ready? So I sold all my shares. I just like being fully transparent. I sold all my shares on that day. And I was buying my shares. Look, there's a buy order. Look out, dude. So anyway, sometimes it's okay to take the loss on stocks. You know, here's why the stock's at all-time lows as well. If you're wondering, like, why is the stock at all-time lows? Just look at the net income. Just for eternity, they just burn net income. Like I never looked at financials, and financials really explain the movement of stocks most of the time. It explains why Palantir is at all-time highs and Lucid is at all-time lows. So I really think in the long run, financials and numbers outshine, and that's why on the stream we focus so much on the numbers. By the way, if you want to hit the follow button, we stream every day. We just look at stocks. And by the way, I sell nothing. I have no course book, WhatsApp, Telegram, literally nothing. I'll never follow you, DM you. Watch out for people impersonating. So Clem said SESAI. What's the ticker symbol for that? We'll check it out. ChargePoint burned me in the past. Same. Oh, dude, Mike, that's rough. So Peter said Target. This is another stock that I think might be a slight dividend. Actually, this one has a sustainable dividend, but I can understand why this one's not doing too well. So Are you sure about that, Gabe? But check this out right here. If we look at Target right here, Target has a 5% dividend yield. And check out the payout ratio. Yeah, hey, Jills, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But look at the dividend. You get a 5% dividend yield, and the payout ratio is actually fair, a 50% payout ratio. But one reason why, if we just looked at Walmart stock, we looked at Costco earlier, both of those stocks are at all-time highs, like legit a couple percent off all-time highs. Well, look at Target. This one is significantly off all-time highs. If you're wondering why is that, that's because first off, they're being out innovated, but they sell more discretionary items. They're not exactly a grocery store. Like if we look at their revenue, only 22% of the revenue is food and beverage. Then they sell more of the discretionary items like the household essentials, the apparel, the home furnishing, the decorations, the beauty products. So that's why Target is being hurt right now. And also they kind of just lost their growth. Their sales are down 1%, add inflation to that, that's rough. So revenue's down 1 and the profits are down by 21. So their net margin did fall. They're competing in a low margin industry, 3 to 4% margin business. But look at this. They made 935 mil in net income this quarter, 935 mil, and the dividend only cost 510 million. So they are actually able to afford the dividend. But we kind of just, for the stock to really go up again, like for me, we really want to see the growth come back. And again, I like when you look at Walmart and like Kroger, they're expanding their like delivery business. Like just also anything you can get on Target, I'm pretty sure you can just get on Amazon. And but a lot of people like to be Target shoppers and look at all the cool stuff. But yeah, hope that was kind of my rant on Target. All right. Yeah, Walmart. All right. So UiPath. Yeah. Okay. UiPath, this company I'm actively trying to get out of. They're one of my bigger losers, but they're up 15% on the day. So we're down 29% on them. Before today, we were down 35% on them. So thank goodness. By the way, I love being fully transparent. I'll share with you here's my lifetime performance. Like all time, we're only up 18% on here, but on the day we're up 4% thanks to AMD and UiPath. But I like doing analysis on this app because it's way better. Let's see, PATH. They've actually seen a lot of strategic partnerships. Yeah, UiPath forms partnership with major tech companies. That includes Google, OpenAI, Microsoft, and Snowflake. Yeah, Snowflake's a good data company. And also they partner with Google Gemini for voice integration. So the sentiment is good on this company. But I don't know if I'll actually sell them after this. They're a bit boring for me right now. They really don't have much of a moat. I'm glad that they're partnering with these new tools. And back here, I've owned this stock for years, but y'all want to see something sad? Look at UiPath right here. If we scroll back, this is in 2021. Like that's 3-4 years ago. In 2021, we were buying shares at $57.50. We've owned this stock for a while. But right back here, if you're wondering what happened, they reported earnings. The earnings were actually good, but the CEO quit out of nowhere. It was literally like a cash grab scenario. It looked so bad for the company, and they just got sent to all-time lows after the CEO bailed out after cashing out. Anyway, but it looks like the sentiment's finally back for UiPath. They're an autonomous kind of robotics play. Which platform are you using? You split mega fast. Oh yeah. Hey, by the way, if you want to get any of these apps I'm on, they're all in the link tree in my bio. I'm not sure which one you're talking about. This one I'm on right now is the first link. Robinhood's the second link. And this one's the third link. Yeah, I have too many brokerages, but honestly, there's no burden of having multiple. Someone said, yeah, this is our dividend only portfolio, by the way. We also have a Roth IRA. Oh, I think we're at an all-time high today in our Roth IRA. We own I'm trying to bring the growth back to this portfolio. Someone said, what happened to DCTHO? I normally wouldn't own this kind of stock, but there's something that actually impressed me. I would never, ever recommend this kind of stock to anyone. Maybe I'll talk about it if anyone wants to hear my thesis on that one, but anywho. All right, so let's see here. Hey, Jokes, what up, dude? Jokes with the rose. Hey, I appreciate that. He said AC in stock. Is that Architecture or Akinter? I always fumbled the name, but check this out right here. I think they just bought a company. Yeah, so they acquired an AI learning firm called AI to me, something like that. Anyway, that I like that they're doing M&A because this company makes a lot of money. If we go to their net income right here, this is good. 1 to 2 billion in net income every quarter. But one reason the stock did fall because the revenue grew by 7, but the net income fell by 15. And that was real. That wasn't some one-time adjustment. The net income did actually fall 15%. So that means their net margin fell to 8%. So that's why the stock, I believe, has been kind of struggling a little bit lately. But yeah, the free cash flow is insane on this company. They're doing $4 billion and they're kind of answering this. Like the growth isn't crazy, but they're answering this with M&A. They're buying companies. This is great news. Like, look, they're growing mid to high single digits, 7%, 7, 5, 9, 3. So we do want to see the growth come back, and they're kind of answering that. Hey, try not to spam there. Hold on here. He said, how much S&P 500 should I, I recommend, S&P 500 have that as the backbone of your portfolio. With the stock market, it's not get rich quick. It's to slowly build and preserve your wealth. You're supposed to get an 8% CAGR with the S&P 500, beat inflation. You started with the $100 and the $100 turns to 108, and then the 108 to 120, then 120 to 150. You get that snowball effect, that compound interest, the eighth wonder of the world. So, how much did you start investing with? Like literally a couple $100 the day I turned 18. Check this out. Or even in this account, like for the longest time, this account, if you kind of look at the top left, it was worth $150 for months. And then see, that's how you get the thing. The money you already put in compounds at 8%. And then as you deposit more, your total portfolio value just rockets higher. So especially in a bull market, if you're in the right stocks, or even if you're in the wrong stocks, the momentum has been crazy on some pretty trash names recently. So, all right, let's get back to the analysis here. Someone said, what is SPMO? I saw that one a few times. Let's see. This is a cool alternative to the S&P 500. So we just looked at the S&P 500 that CAGRs at 8% a year. Like imagine, like this is an insane chart right here. This one's actually CAGRed at like a 10% or a little higher than the normal S&P 500 because it's a little bit different. This could be a more momentum-y diversification than the S&P 500. Like check this out, with the S&P 500, the largest holding is NVIDIA, but the largest holding in this one is Broadcom, then NVIDIA, then Meta, then JP Morgan. Notice there's no Apple. I'm not seeing Microsoft either. No like Tesla. Like they really picked and choose. I actually like JP Morgan. A lot of people think, oh, it's a bank. It's probably not doing too well. No, dude. JP Morgan has been one of the best performing stocks out there. Like the momentum is crazy. Palantir, Netflix, Oracle's been on fire. I do like that actual ETF right there. Pretty cool. Can you rate WDC? Is that Western Digital? So let's check this one out. I believe this is like a chip company. Yeah, look at that. They're at an all-time high right now. So, look at that momentum they've had. That's rare. So let's see what happened. Oh, they sell hard disk drives. Let's look at their earnings. So they beat on revenue. They missed on net income, but they beat on EBITDA. So maybe they had a one-time adjustment. Yeah, the revenue's been super growthy. Check that out. Revenue's up 30% year over year after it grew 159%. So we're really comparing to like a whole here of the revenue in negative. But looks like the growth is finally back on this company, and not just making revenue super growthy, but profits. Wow. They're, $500 million a quarter. These growth rates are insane. What's the margins now? Yeah, 10 to 22% net margins. Like the growth is finally back. Like the sentiment completely changed. Like that's why the stock rallied up in such a short amount of time, I believe. Like this is an insane rally. I believe it's because how quick the thesis changed. Because literally a year ago, it was kind of a trash stock. This was the numbers you were working with, but now we have real numbers, real profits to work with. That explains, I think, the insane rally. Do you know anything about QXO? Oh, is that roof company? Yeah, I don't know anything about this one because it doesn't have like the numbers yet because the merger like just went through whatever. But residential roofing products, this is your roofing play. Even in a recession, if you have a leaky roof, you better get that fixed before it causes more damage. So anyway, like look at their numbers right here. This is what I was kind of talking about. Like before today. This is why I'm having trouble analyzing them. The revenue is nothing, but now as it went through, anyway, that's your roofing play. I like Carlisle. I actually own a roofing company that just does roofing and insulation. This is ticker symbol CSL, Carlisle Group. I have multiple YouTube presentations if you want to learn more about them. By the way, best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But just type into YouTube Nathan Robert. I'm streaming on there. Hit the like button if you want. By the way, I saw nothing. I have no course, book, WhatsApp, nothing like that. So let's see here. What about UPXI? What is UPXI? This is Upexi. So we don't cover these too much. So if you look at the top right, this is a $400 million micro cap at all-time lows. But let's go see what they do because why not? So they're internally manufactured. So that fell 12% year over year. Contract manufacturer. It looks like the business just lost its growth. Let me see here. Whoa, so they have like no sales. Yeah, that's rough, man. Yeah, revenue of 3 to 4 mil. These year-over-year declines aren't great. They're losing net income every quarter. Looks like the balance sheet just beefed up. Whoa, did they issue shares or something? Oh yeah, so look at that. If you're wondering why did the assets go up, liabilities stay the same, you just go to the cash and financing activities. As if this is positive, that means they either issued shares or issued debt. And in this case, they just diluted the shareholder, which is actually the smart thing because they needed to do that to really beef up their balance sheet and gain some trust. Wondering if it is wise for me to put most of my portfolio into one mutual fund for now while I learn. That's exactly, Azio. That's what you should do. Just put most of your money in the S&P 500 and then play around with some individual stocks that you know and love. But I'm not just saying this. I actually followed this advice. Like, invest in what you use, like Meta, Google, McDonald's, our utility bill is through Constellation Energy, our natural gas bill. But that's not why I own them. And that's not why I own Google or Meta either. They also have good fundamentals, like Home Depot, Amazon down here, Coca-Cola. Like, I own all these great companies, I think. You just buy and never sell them. Best AI stock? Hey, I like Google, but not a pure AI play, I guess. All these companies are all investing into AI. A pure AI play is probably InnoData, but I wouldn't buy that one at all-time highs. It's been one of the best AI plays out there. InnoData, all-time highs. We're up 160% on them. Okay. Thoughts on NUKZ? What is NUKZ? Is that an ETF? This is the Nuclear Renaissance Index ETF. So this is an ETF. What an ETF is, it means it's just a basket of stocks. And let's see what it owns. So it owns, I love this ETF already because its largest holding is the best nuclear play out there, Constellation Energy. Out of all the U.S. nuclear reactors that exist, in the U.S., out of all the U.S. nuclear reactors, Constellation Energy owns 30% of all of them. Cameco is the one that supplies the uranium to Constellation Energy and other reactors because, nuclear reactors need uranium. Oklo is a startup years away from any revenue. Lockheed Martin's a defense play. Rolls-Royce, another defense play. Honeywell, aerospace and defense, another defense. So actually, I like this ETF, but what's a 0.85% expense ratio is a little high, but again, they're at all-time highs. Best nuclear ETF? Actually, there is no best nuclear ETF. Maybe that one right there, NUKZ. I'm a fan of just picking and choosing your favorite nuclear stocks. And, I've looked at all of them. I've looked at Oklo, SMR, Vistra Energy, GEV, CEG. This is the best one out there. A second place would be Vistra Energy. They own 3 reactors, but anyway. All right. What's this stock? Your poor battery? Yeah, I need to charge my phone. AZO, that's smart. Should you diversify in the red? So yeah, this is AutoZone right here. Another kind of recession resilient company. Even in a recession, got to get your tire fixed, oil changed, whatever. So AutoZone is one monster of a performer. If you're wondering why does the stock go up so much, it's because they spend so much money on share buybacks to the point where it's like 5 to 6% in buybacks a year. Where it literally instead, if they didn't choose to do buybacks and instead did dividends, you would get around 5 to 6% dividend yield with this company. But instead, they choose to do it on share buybacks. That's why the stock doesn't go down. The shares outstanding go down. That means EPS goes up. You get more ownership. So, that's the cool thing about AutoZone. They have a rule like 70% of all their leftover cash they just deploy to share buybacks. Very shareholder-friendly company. Hey, what up? Gene said ASML. Yeah, this is the lithography company. They have 3 customers. Those 3 customers are NVIDIA, Intel, and Samsung. Their lithography machines are so huge that it literally takes 2 Boeing 477s, or I forget the exact number, but whatever. It takes 2 Boeing planes to ship them on. But check this out right here. This one deserves to be at an all-time high because the actual numbers align with it being at all-time high. The revenue's up 35%. Revenue's up 35, but net income is up by 86. That means they're expanding their net margins. They've never had in over 34, or even close to that before. So highest net margin ever. So, and you get a dividend. You get a 0.75% dividend yield. So yeah. How much money do you invest in each one? Wait, in each what? In each stock? Or I invest in each stock how much conviction I have into it. So like if I go down here, like I have some small fun money positions like SoFi, PSIX, Rumble. I so don't believe in Rumble. I honestly think they're going bankrupt, but I own 10 shares nonetheless because I think they have a lot of momentum. I literally think Rumble's going bankrupt, but I own them nonetheless, so I own 10 shares of them. But based off how much belief I have into them. Like that's why my second largest holding is McDonald's, or actually my third largest holding here. But McDonald's is I have $5,000 in them because they're recession proof in my opinion. Especially, it's a nice asset to buy, especially in this overvalued, maybe tech heavy market. FOUR, is that what's a good buy price? I think, oh yeah, shift for payments. Let's see right here. So revenue is up 16% and the net income, let's see, is that real? Okay, so there is some little adjustments here, but hey, yeah, McDonald's is lit. Y'all see the new Monopoly stuff is back in McDonald's? When would be a good time to buy McDonald's stock? Right now. Especially like if you have the intention to never sell it like me, like right now is when you buy McDonald's stock. I'm only up 5% on them. And you get a 2.5% yield. But yeah, check this out right here. They're nearly at $1 billion in revenue this quarter, and the 41 mil. Yeah, they really only had like 50 mil in net income, so they had low 4 or 5% margins. Huh? I don't know about this company. It's some sort of payment company. I like SoFi, I like PayPal. I got to learn more about them. The numbers look a bit choppy, but they are more growthy than PayPal. They are more growthy than PayPal. How can I start doing this? Well, hey, if you want to buy stocks, you need a brokerage, and if you want to get, I use this brokerage right here. If you want to get it, it's in the link tree in my bio, the first link there, and it's an affiliate link too. So if you sign up and deposit, we'll both get like some free stocks. I think if you deposit $100, we'll both get like some free stocks or something. But anyway, let's see, CRM, please. Yo, that's Salesforce. This is your white collar job like software right here. So they announced Agent Force, but this one, Salesforce, just like Adobe, is really being hit by the AI thesis. AI might replace Salesforce in 10 years from now, and with the weak white collar job market. But for right now, the numbers look great on Salesforce. I love their assets. They own Slack, Agent Mule, and check out how diversified that they are. 24% is their service revenue, 22% is their sales, platform and others 20, integration and analytics is 15, marketing, commerce. So I love how diversified that they are. They're really profitable as well. They're doing share buybacks. They're doing dividends. Net income's up 33% year over year. The free cash flow did fall a bit year over year, but they are a bit slow growthy right now, but Salesforce actually just acquired, ticker symbol INFA. That's why the stock looks really flat right here. That whenever a stock looks really weird and flat like this, that means that they're getting acquired. But now all this revenue right here, this basically 400 mil of revenue a quarter, is all added to Salesforce now. So plus all the profits and anything they could bring synergies, whatever. So someone said, can you do RBRK, cybersecurity play? I actually have Rubrik in my hidden gem watch list right here. I love Rubrik. This is a super growthy company that I love, but the valuation is a little high. But again, they're so growthy that I might not ever get a chance to buy them at a valuation I'm happy with. But check out this right here. This is insane. The revenue's up 51% year over year. Last quarter was up 48, 47, 42. After growing 35, the revenue just hits a new record every year, every quarter. Part of this growth came from an acquisition. If we go to their cash from investing activities, if this is negative, that means they just bought an asset, bought a company, bought land, whatever. And it was $735 million. They basically just bought a company. So that's great news. They are still losing money though, but look at how the losses are narrowing. They lost 45% less net income than the previous year, so that's good news. Beating on expectations as well. Analysts expected 282, they reported 309. So Rubik's your cybersecurity software play. I do like other cybersecurity names like PanW, Fortinet, CrowdStrike. There's a lot of good cybersecurity names out there. Wait, what was Trust me for long term. What? I don't know what stock. Do it next, or I don't know what stock you're talking about. BlackRock. Hey, that's your asset manager right here. So they have a lot of ETFs like The new iShares Bitcoin ETF is really popular, and this company's at an all-time high. They deserve to be as well. And if you buy this stock, even right now, you still get a good dividend. A 1.75% dividend. But check this out right here. They're in equity. That's at a record. But one super growthy part about BlackRock has been their alternative business. Whenever you own IBIT or their new Ethereum ETF, there's a new Ethereum ETF by BlackRock. There's an expense ratio when they collect these high margin, revenues. So the sales are up 71, last quarter's up 81, 63. So that's been really growthy recently. And yeah, they just make crazy money, 1.7 billion in net income a quarter pretty much, plus a 2% yield. I do like BlackRock. I don't know if I buy them at all-time highs, but oh, my bad there. He said ticker symbol next. So this is next decade. Let's check it out right here. Unfortunately, this stock is the same price that it was in 2018. So it's nearly been flat for a decade, but let's check out their numbers here. So this is a startup right here. So when we go to the revenue, it says 0. Let me see. Let me verify that. So yeah, it says no data here because this is a startup. So they've never sold a product or a service. So do beware. There's no revenue, and they lose 50 mil a quarter. Wait, what's the market cap? That's rough. So this is a $2 billion company losing 200 million a year. So they're losing 10% of their market cap a year. Well, basically, we want to really see this company finally start to sell a product. Looks like analysts aren't expecting any revenue, but I'm sure whenever they maybe release a product, it'll go. BRZE. Hey, what up? BRZE. Strong buy, but the income is burning. Let's see. So this is a $3 billion company. Let's just go straight to the net income. Let's see. They're losing a bit. Yeah. 20 mil in net income a quarter. It worsened from the previous year. It's not the end of the world though. 30 mil. Let me see here. Yeah, revenue's up 23 after it grew 26. At least the growth is good. Like the growth is pretty good. It's not the end of the world, but yeah, I'd be careful with them. I wouldn't have it as like a huge position, of course, but maybe a small little. How's Xbox looking, or Microsoft, I guess? Yeah, yeah, you're right. Microsoft owns Xbox. They also own Minecraft and wait, no, I don't think they own Activision or Blizzard, or I forget. Anyway, Microsoft is a big kind of game company with Xbox and Minecraft, because Minecraft's the biggest game of all time. But yeah, mainly most of their business is their productivity and business like solutions. Like think of OneDrive, Microsoft Word. You have to pay for a subscription to get that, and that's what this business is. It's crazy. 120 billion of annual revenue for them, and it just hits a new record every year. And that's just one segment of their business. They also have their intelligent cloud. A lot of companies are getting to the cloud, like AWS Cloud, Google Cloud, and then there's Azure Cloud, which is up 25% year over year to a new record. So they have a better credit rating than the literal U.S. government. If we look at the net income, they're pretty much making 25 billion in net income every quarter. It's insane. What app is that? Oh yeah, hey Bali, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Let's see, Starbucks. Yo, Starbucks. Ooh, how about Palo Alto? Actually, let's check out Palo Alto Network. So that's who actually owns Palo Alto Network? That's the homie Nancy Pelosi. Genius trader apparently, but one of her holdings is PANW. This is her cybersecurity play. Honestly, they deserve to be at an all-time high. I'd put them on the watch list if you want exposure to cybersecurity. Like if you look at a lot of software names like Adobe, Salesforce, that part of software is really being hurt by AI. But I really feel like cybersecurity is a part of software that should really benefit from AI because hacking is going to get better with AI. But anyway, this is a subscription model company. I love subscription model companies because it's all reoccurring. It's really predictable. And this is what you want to see for a growth company. Like this is why the stock's at an all-time high. Their subscription revenue just literally hits a new record every quarter, every year. Like the growth rates, just there is no red. There's no red on the growth rates. It just hits a new record every year, every quarter. So they're making a couple $100 million net income every quarter. The free cash flow is ridiculous. So this is probably my top cybersecurity pick out there. I like Fortinet. CrowdStrike's good as well. Yeah, there's CrowdStrike. All right. CMG is starting to look better. Well, Chipotle stock, that one, a lot of the restaurants are struggling right now. So, and it's not just Chipotle. What happens? Yeah, hey Ross, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where. By the way, I'm on a brokerage. It's where you buy stocks on. But here's Chipotle right here. If we just look at any of the restaurants right now, so Chipotle is on a nasty decline. Ever since they reported earnings. I could honestly see them going a little lower before they go up. Here's why. If we look at their PE, which is net income multiple, they're trading at 37 times net income, and the industry average is 27. So they're trading at a premium multiple, and that's okay to have a high valuation as long as you're high growth, but they've been missing on their growth expectations, hence why the stock aggressively gapped down, but they're even still a little bit expensive even right here. But if we look at this analyst expectation, they missed on revenue this quarter. They missed on revenue last quarter. If we just go to the total sales for Chipotle, the revenue's up 3% year over year. That doesn't really beat inflation. Revenue's up 3, and in the profits, the net income was actually down by 4. So that means the net margin fell. But it's not just a Chipotle problem. Look at Wendy's, for example. I feel bad for Wendy's. There may be a day and time where we never see a Wendy's again. Wendy's is at the same price that it was back in 2007. Or actually technically the same price that it was back in 2003. So Wendy's is at an all-time low, like Jack in the Box, man, RIP all these food companies, Krispy Kreme as well. So it's kind of the whole sector that's really being hurt right now. All right. You don't see the link. Oh yeah, if you want to get this app I'm on, it's in the link tree in my bio. It's the very first link on there. I'm not sure which app. I have all these apps right here. I got Robinhood as well and Webull. But yeah, anyway, it's where you buy stocks on. This is a brokerage. If you want to get it, link tree in bio, first link. They're all linked up there. Someone said SoFi. Yo, SoFi stock, dude. This is a stock that deserves to be at all-time highs. Not just propped up on momentum. Like some of these other risky names. But I do own this stock. Full disclosure, I'll show you that right here. This is one of my best performers. I regret every share I've ever sold a SoFi. But yeah, we're up 350% on SoFi, and they deserve to be at an all-time highs because of how growthy the business is. If we go to their financial services right here, this is what is nuts. The revenue's up 105% after it grew 80, after it grew 222, after it grew 260. Like, the growth just doesn't stop. I really think people are starting to take SoFi more serious. This is the orange line. That's what the analysts expect. They're beating on revenue every quarter. They're beating on net income every quarter. They're beating on EBIT every quarter. Like, this is the kind of stock that deserves to be at all-time highs. The good fundamentals justify it. Like, I saw someone say Lucid's at all-time lows because the fundamentals are terrible. And we'll actually maybe look at Lucid. But yeah, the revenue's up 42. They did $850 million in revenue. Out of this $850 million revenue, $100 million of it was after-tax net income. I mean, that's insane for SoFi. So that's why I really think people are starting to take them serious. Another fintech play. Yeah, what up, Awful? He said NU stock. This is a cool crypto company. I think y'all will actually find this pretty fascinating. This is a crypto bank out of Brazil. So if we go to where the revenue comes from, 92% of the revenue comes from Brazil, but that's where their currency sucks. That's where people actually use crypto for transactional purposes. So, like here in the US, we don't do it much. We have a good currency, but down there they don't. But I'm not just recommending them because they're some crypto bank. I'm recommending them because they have good, amazing fundamentals. This is in USD. They're literally making 500 to 600 million in net income every quarter. And it just, like, the growth rates are insane. It just continues to hit a new record every year, every quarter. Warren Buffett and Berkshire Hathaway also own a stake into this company. So anyway, this is your kind of cool crypto bank. You get exposure to crypto. Hey, what up, Johnny? Shout out to the member, Johnny. Hey, he's our only member, Johnny. What up, dude? He said Zeta stock. Let's do it. So this is, I actually don't remember, not Meta, but we got Zeta right here. Let's check them out. So they're up 5% on the day. They've been beating on expectations, so that's good news. They beat on revenue, beat on net income, and they beat on EBITDA this quarter. So I can see why they're doing good. Yeah, revenue's up 35 after it grew 32, after it grew 25. And they're narrowing their losses at a faster rate as well. So that means they're growing margins, though the net income losses narrowed by 55%. This is great news. So, and deleveraging their balance sheet, their liabilities were 62% of the assets. Now it's only 38. So I can see why they had a nice little gap up on earnings so much right here. The earnings were good. I don't know. That wasn't too much detail on what they actually do. I wasn't too sure, but what platform, please? Oh, yeah. Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, hey, Professor Oak, what up, dude? You're right. We need to charge my phone here. So let's look at Palantir. We actually haven't looked at Palantir today, surprisingly. This is another company that their good growing fundamentals explains why the stock is at an all-time highs. I will first off point out that this is a pretty expensive multiple. They traded 122 times revenue. Not 122 times net income or profits, but 122 times sales is crazy. But here's why they deserve a high premium. 55% of Palantir's revenue comes from the government. Literally, so many police stations use their software. software, the Navy, they use their software, and look how growthy this is. The revenue's up 49% after it grew 22, after it grew 15. Like the growth rate is growing. That's insane. So the government revenue's at a new record, and not just the government revenue, but also the commercial side with other S&P 500 companies and mom and pop shops. That's up 46% after going 32 after 10. Again, the growth rate's growing. It's insane. The growth on Palantir, beating on expectations. They had their first ever $1 billion revenue quarter. They did $1 billion of revenue, and out of that $1 billion of revenue, $330 million of it was after tax net income. That's insane. So that's easy math, 33% net margin, and they have a literal fortress of a balance sheet. No debt at all, legit debt free, and $6 billion of cash. That takes a lot of risk off the table. It's a huge safety net, huge I wanted to pull up something here. One reason, actually, Palantir has completely recovered all of its decline. One of the reasons, if we looked yesterday, there was a huge red candle. Like, if you're wondering what happened right here, basically the military said there was a vulnerability in Palantir's software, their government software. So that's why the stock fell. It has pretty much rallied it all back. Okay. Hey, what up, PN? What up, Cheaper? What up, Delectable? Hope y'all are having a great Monday. Oh, someone said GE Aerospace. Yo, this I regret. I wish I kept my shares. This is a quality company. Ever since the spinoff from GE Veranova and GE Healthcare, the management has really been able to focus on margins. There's no competition for what they do. They repair these commercial plane engines, and the CapEx and the the market, they are the market share. It's crazy. So if we go to this business right here, it's actually growing very nicely. It's up 30% year over year. Let me just go to this down here. We look at this is the impressive part that I don't believe. And this is why they deserve to be here. This is a $300 stock. They deserve it. Look at this. The revenue's up 21%. So revenue's up 21, but net income is up by 59. Again, in English, that means that they expanded margins. Margins went from 13 to 18. When you're doing 11 billion of revenue a quarter, that little percent margin, that extra 4% margin equates to, an insane amount more to the bottom line. And you also get a small dividend, a 0.5% dividend yield. Not too shabby. They just bulked up the dividend. There should be some dividend growth, but yeah, they're beating on expectations like crazy. Analysts expected 9.5. They reported 10. The analysts expected $1.50 of net income or net income per share. They did $1.80. So yeah, another company that they're like Palantir, their good growing fundamentals explains why the stock's at all-time highs. But if you're ever wondering, look at a stock like Lucid, why is this stock, at all-time lows? It's because the fundamentals are not good. If you just go to the net income right here, this, you just want to really stay away from the money losers, especially a company burning through this amount. Lucid lost 500 mil, 400 mil, 300 mil, $1 billion that quarter. So pretty much just for eternity, Lucid just burns net income. They're also issuing shares. They're diluting you while the stock's at all-time lows. You want to focus on quality. Don't just buy a stock because it's down. Have a reason, look at the numbers. By the way, none of this is financial advice. I'm not an expert. By the way, I sell nothing. I have no course, book, WhatsApp. I'll never follow you. I'll never DM you. Please watch out for people impersonating me. I'll never follow you or DM you and nothing like that. So anyway, let's keep going here. Google, dude, heck yeah. We haven't looked at Google either today. Another stock that deserves to be at all-time highs, a Mag 7 company that's literally an ETF in one. They own Android, they own YouTube, they're the Google Cloud. The Google Cloud has been really growthy. They're now in cybersecurity with the $30 billion Wiz acquisition. They're in quantum chips, TPUs. They own Waymo, autonomous driving company. So I really like Google. His sub said this got to be pre-recorded. Yo, this is not pre-recorded. You can literally check the live price of Google on your brokerage live, and the times at the top. Anyway, sometimes I sound like AI, sorry. But anyway, check this out. This is what's nuts. Google literally makes 25 to 35 billion of after-tax net income a quarter. What is Google doing with pretty much 25 billion net income a quarter? This is why the stock never goes down. Did you know Google literally spends 15 billion in net income a quarter solely buying back their own shares? Google spends $5 billion a month buying back their own stock. And you get a 0.32% dividend yield. And they're investing in AI. Like Google Gemini is now bigger than ChatGPT, I believe. Or it's like a more powerful one. I didn't get much into it. But Google has been unpriced from an AI loser. Remember, at 150, they were being priced in as an AI loser. But now Google is an AI beneficiary. Now when you search up something on Google, it has the AI results built into it. I love that. Hey, what up, Jace? Good to see you, friend. Someone said IBKR. Hey, that's a brokerage, kind of like Robinhood. IBKR. Um, hey, I'm from Malaysia looking to invest in US. Which stock do you think has more room to grow? I a lot of valuations are tough to pay right now. But Meta looks good here. What is IBK? I cannot type. There we go. Interactive brokerages, But Meta looks good here. Amazon is great. Amazon's a never sell. Google's a never sell. Anyway, here's Interactive Brokers, IBKR. They're kind of like they're just like Robinhood. It's a brokerage. We can see their daily active trades or their DARTs. They have 3.5 million daily active trades. They have 3.87 million paying clients. Anyway, these brokerages make a lot of money off interest income, and that is yeah, a lot of their money, but brokerages make insane margins. You ready for this? If we look at the revenue's up 7% year over year. So revenue's up 7, but net income's up by 24. They did $1 billion of net income. So if we go to their net margin, they had a 40% net margin. So, and they grew the margin by 15% year over year. But that's what's cool about Interactive Brokerage. You all now also get a dividend, a 0.4% dividend yield. So this is kind of like an alternative to Robinhood stock. They're just another brokerage. The brokerages have been going crazy. Food too, all the thoughts on AMD. Oh, Rocket. Actually, I want to look at Rocket. Ooh, remind me to look at AMD. So let's look at Rocket Lab right here. This is probably my favorite space stock out there. I've seen a lot of space stocks, ASTS, Lunar, but this is honestly the best one from a fundamental point of view, and they deserve to be at all-time highs. I certainly wouldn't buy it at all-time highs there, at all-time highs, but check this out right here. Most of the revenue comes from their space systems business, and check out the growth here. This is up 27% after growing 94, after growing 9. Like it just hits a new record every year, every quarter. And not just the space systems revenue, but also their launch services. That business is up 58% year over year, also to a new record. It's never been over 46 million before. So that's doing very nicely. Do beware, they are still losing like 50 million net income a quarter, but as long as they can keep up this growth, I mean, that's great. They also just acquired Geost and some other company they just acquired. But Rocket Lab secures major contract extension for satellite launches. Well, hey, that's cool. What app is this? So, hey, what up, Leon? If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But let me pull up AMD right here. AMD got a huge deal from OpenAI today. So AMD is giving OpenAI 10% of their company, but OpenAI is going to buy a boatload of chips, and AMD is going to get a lot of money. But here's kind of the cool thing. As AMD makes a bunch of net income, that's going to send AMD stock up, which is then going to make the 10% of OpenAI or the 10% of AMD that OpenAI owns go up as well. So that's going to make OpenAI go up. And remember, NVIDIA just took a $100 billion stake into OpenAI. So literally, NVIDIA benefits from AMD going up because AMD going up sends OpenAI up because of their stake, which sends NVIDIA up. Pretty circular. Kind of interesting, but check this out right here. AMD, big market share, 17% PC GPU market share. Half the revenue comes from their client and gaming, then their data center business, which is growing nicely. But yeah, they finally, the growth is going to be even greater in the future. They're already beating on expectations the past 3 quarters. I can't wait to see what the revised estimates are with this new OpenAI order. But check this out. Revenue's up 31%. Net income's up to 229% year over year to 870 million. That's like the highest net income we've seen in a while on AMD. Same with the FCF, which stands for free cash flow, 1.7 bill of free cash flow. No net debt. This is a really good balance sheet on AMD as well. So yeah. What was that stock I want to look at? What a way, Looney. Should we look at CRMD? By the way, I do an AMD, by the way. Is paying for Moomoo AI really? There is no paying. No, hey, this is a free app right here. But what's with your Perry play? Oh yeah, so check this out right here. This is one of our biggest losers right here. So again, I recommend if you want to buy a stock, I recommend you DCA, you dollar cost average into it. That just means you slowly buy into it. It's a more patient approach, more disciplined approach instead of just spending all your money at once. But just doing that, just know it won't always save you. Like look at this stock right here. We are down bad on this company. And that's because out of nowhere, like that's also why this is another good lesson for being diversified. Don't keep all your eggs in one basket. Don't be all in on just one stock. And they lost it. They didn't disclose this properly, Most of this revenue they were making came from one deal with Microsoft. They used to have an integration with Microsoft Bing, where Microsoft Bing, some of that revenue would go back to Perion, but they lost that contract as they focused on their own AI, and the sales plummeted, down 43, down 44, down 44. So the growth is gone there, which is unfortunate, but they're too cheap to sell. This is pretty much a cash play at this point. If you look at the market cap, how much is this whole company worth? This whole entire company is worth $442 million. So the whole company's worth $442 million. They literally have no debt at all and $320 million of cash. So a good like 60, 70% of their market cap is just their cash on hand. Bloom Energy. Hey, what's the ticker symbol for that? We'll check it out. Can you review TLRY for earnings call Thursday? So, hey, this is an industry we can't really cover. And honestly, you don't really want to be in this industry. Like, this is one of the worst looking stock charts out there, sadly. But they deserve to be at an all-time low, sadly. And they've just kind of been momentuming higher. I don't know if there's any like favorable regulation. Let me see if there's any weekly news here. Endorses Medicare coverage for that right there. I'm not going to say that word just because I know TikTok cracks down on me. By the way, best way to support me is just subscribe to my YouTube channel. I'm trying to bet on my YouTube channel. I'm streaming on there as well. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But here's TLRY right here. Here's the tough part. First off, if we go to their net income, I don't know how they did this, but they literally lost $1.27 billion in net income this quarter. In the previous quarter, they lost $800 million. And that money has to come from somewhere. That doesn't just like happen. Like, so look what that did to their balance sheet. It just plummeted. Like liabilities stayed the same, but assets plummeted. It's rough. And, they lost all this net income all for a business that declined year over year. Sales are down 2.3%. Now there is some hopium, for the future regulation and all that, but not one I trust a lot of money in. You're doing the right thing. He says he has calls. You probably want to swing trade this with some sort of, short-term option or swing trade, but I would not trust that one to buy and never sell. Hey, user 732, no way, my friend. He said, DVLT, thank you for all the roses. I really much appreciate that. Let's check this out right here. Yeah, for the 25 roses. This is Data Vault AI. Check that out. They're up 55% on the day. Oh, so they're a very small company, a $380 million company. Oh, and they're at all time. Okay, so $380 million company. They were worth, $150 million before today. But let's see. Revenue is $1.74 million. Actually, look at these expectations right here. Let's really hope they can meet these. They did $1.7 million this quarter. They're expecting $6 million the next quarter, and then $6 million the next quarter. So those expectations are pretty interesting. Yikes. So they lost, $37 million in net income this quarter. And they're worth $38 million. So that's 10% of the entire market cap they lost. But there's some sort of obviously good news that I don't know here. Some sort of game-changing news, of course, if it's up 50%. Data Vault shares rise on upbeat revenue guidance. Oh, so they reported guidance. Maybe that's where these estimates came from. Maybe that was the updated guidance, the $6 million revenue. Anywho, hopefully that was helpful. And yo, no way. Yo, shout out to the homie Looney on the YouTube stream. He donated a rose with oh my goodness. Thank you so much, Looney. Hope you're having a great Monday, by the way. Hope everyone is. So, someone said CRMD. This is a stock that I do own in my Roth IRA. This is a really risky stock, by the way. And as much as I love this company, they're only a $200 position for me. But I'm down 15% on my shares. And again, I'm going to show you their numbers. They're going to impress you, and you're probably going to want to buy them. But there's some like hidden risk. You don't want to make this a meaningful size position in your portfolio. I can't stress that enough. Like just put $100 or something or less and have it as a fun position. But here's why I love them. Here's why I think this might be a 3X. So if you look at the top right, this is a $900 million market cap. So the whole company is worth $900 million. And check this out. They literally have $190 million of cash with no debt. So over 20% of the entire market cap is their cash on hand. And their cash isn't just sitting there idle. It's also earned in them positive interest every quarter. This high interest rate, $822K of positive interest. A lot of companies are paying negative interest because of the high rates, but also, so basically you're buying a $900 million company and $200 million of it is cash. So you pretty much do a $600 million X cash multiple. And you're buying a business that is growing insanely. The revenue is $39 million this quarter. Out of this $39 million of revenue, $19 million of it was after-tax net income. $20 million of it was after. Like the margins are nuts. They have like Reddit type margins, 95% gross margins. They're the only FDA approved like cardiovascular tubing product or whatever they do. And look at the expectations as well. This is the crazy part. That net income is supposed to more than double. Revenue is supposed to more than double. So the future's bright. The valuation's cheap. So I bought them. Simple as that. There's a lot of risk though. Again, 60% of their sales come from one hospital group. They only sell one product right now. It's risk. What app is that? Yeah, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Someone said Moderna, mRNA. Wait, is it mRNA? Yeah, so I don't love this stock. This is the company that sold the COVID vaccine. Hey, what up, Jeffrey? And hey, what up, Potness? He said, I sound like a nerd. Hey, I'll take that as a compliment. So here's mRNA right here. This is the company that sells the COVID vaccines. And unfortunately, ever since COVID's gone, they just don't have any sales. I mean, look at this. If you go back to 2022, when there was COVID, they were printed money, 4 or 5 billion a quarter. But look at it, the most recent quarters, 100 mil. And these declines year over year are really sad. So I can totally understand why this stock is pretty much at an all-time low right now. It's because they don't sell anything. And not only is the revenue collapsed, but their profits have. They're losing, like 800 mil a quarter. So these are some tough losses. I wouldn't trust that one. Hey, what up, Adrian? He said QBTS, yo, the quantum momentum is back. Check this out right here. Here's D-Wave. I'll say this, maybe trim a little bit on this company. Like, I don't know. Not financial advice, but yeah, this is your quantum momentum play. I know this one actually, they had some good orders, like future orders for their sales. Let me see their revenue down here. Revenue's 3 million, 50 million. Again, what's the market cap? Like, this should be nowhere near a $12 billion company. It just shouldn't. But the momentum's crazy. Yeah, this is your quantum momentum play, I should say. What app is this? Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there. It's an affiliate link, full disclosure. It's a brokerage where you buy stocks on. So if you go and deposit $100, we'll both get like some free stocks. It's my favorite. A lot of people just like to keep their idle cash in here. If you look in the middle of my screen, I have $1,000 of cash. It earns you the daily interest, which is pretty cool. So let's see. Hey, what up, Agathis? What's up, man? Someone said, and what up, James Jordan? What up, dude? So someone said CONY. This is one of those like unsustainable, like covered call ETFs, in my opinion. Like if you look at them, the stock is at pretty much an all-time low. It IPO'd at $20. Now it's at $7. You're buying this to maximize your income. If you look at the yield, you get 142% dividend yield. The yield's not that high. Again, the payouts decline double digits every year, and the yield looks higher because the stock is going down. Again, stock goes down, yield goes up. But again, these kind of are a slow bleed of your capital. You pay crazy expense ratio fees, a 1.22% expense ratio fee. These usually don't outperform the S&P 500's 8% CAGR, and you're already losing by 1.22%. It's a tough pitch to really trust in this long run. Like if you want to trust an income producing asset, I wouldn't trust that one. And it's selling calls on Bitcoin. It was something that you're most likely always going to get called on. Bitcoin hit an all-time high today, I'm pretty sure. So I'd recommend, if you like covered call income, learn to sell covered calls yourself, and you save a lot of money, and you'll thank yourself. But yeah, if we go to crypto right here, where's Bitcoin? Yeah, Bitcoin's at 125K, literally all-time high right now. And if we looked at Coney, again, that's this company, CONY, it sells calls on Coinbase, which is pretty much Bitcoin, is at an all-time low. Okay, bro, AMD is up. Dude, AMD is up big time. I'm super happy today. Check this out right here. AMD is up 24% on the day. So we're up 3.6 all time in this portfolio. We're up 17% all time in here. But yeah, UiPath, I think is up. Yeah, UiPath is up 12. SoFi's up 5.6. Supermicro's up 5.6. So dang, P6 is down 8. Sprouts Farmers Market bleeding out again. Rough. Someone said, should I borrow money from the bank for long-term investment? I wouldn't take out debt to buy stocks. No. I have no margin at all. Debt plus FOMO in a recession, don't take out debt. I don't recommend that. But Verizon's down 5%. Yeah, here's the thing. This is Verizon names new CEO, the ex-PayPal boss. That's interesting. I guess the market didn't like that. But here's the thing. This one is also this is a stock you buy to maximize your income. You look at the dividend yield, you get a 6.55% dividend. That's a great yield, 6.55% of your money back. But here's the thing. Verizon stock is the same price that it was back in 1997. So you bought the stock, it's 25, 26 years ago, 28 years ago, you're actually down on your position. Hey, again, what app is that? If you want to get this app I'm on, again, it's in the link tree in my bio, the very first link there. Let's see. SESAI. SESAI is the ticker. Is it Oh, there it is. SES. So yeah, this is one of those like momentum stocks. We probably won't cover them. Or do they have sales? They do have some sales. So look at that. They had 3 million, 5 million. The momentum's really nice, but again, be careful trusting these super small names. They're doing a couple million of revenue a quarter, pretty much transitioning from a revenue-less company to a profitable one. So you really expect these next couple months to be very volatile. But again, the momentum's really great right now. They're losing 20 mil a quarter. That their assets go down every quarter, but they can afford to lose this money because they still have a lot of assets. So basically, we're watching the growth of what happens to the sales. What are analysts expecting? They missed on revenue this quarter, but analysts are expecting 6 mil. Anyway, some AI company. Tesla stock. Fine, we'll cover Tesla. I don't have much good to say about them, though, sadly. And this isn't the popular opinion, so I'll probably lose some viewers for this. But this stock, if we value it the way we would any other company, it's too tough of a valuation to pay. About $200 of the stock of what you're paying right now is the future of robots and robotaxi networks. So you're paying for a lot of future hopium. But here's the tough part, though. That's not the whole thesis. If we look at the PE right here, the PE is the net income multiple. Tesla trades at 268 times net income. It's okay to have a high multiple, like a Palantir multiple, as long as you're really high growth. Tesla trades at 268 times PE. Here's why I think that's unjustified. The growth is negative. If we go to their main business, their automotive sales, that's down by 13% year over year. So their main business is down by 13% year over year. And their other business, their energy generation, is down by 7.5% year over year. So both businesses are declining. Their total vehicles delivered are down by 13.5% year over year. And the margins have collapsed. That's why the valuation, I think, is tough to pay. You're paying for a lot of future, and you're paying for so much. Yeah. So if we look at the revenue's down 11, but the profits are down by 58. That means the margins, are just 3% net margin. It's tough. All right. Can you check Riot blockchain? So yeah, I've looked at all these before, and I'll say this. I've looked at Riot, I've looked at Marathon, I've looked at CleanSpark, I've looked at HUD 8, I've looked at Core Z. All these Bitcoin mining related stocks are all trash. They rhyme with Bitcoin, look, you can see they move together, but they never ever, not a single one, and prove me wrong with one of these. I've looked at all of them though. They never ever keep up with Bitcoin in the long run. So I would never recommend like Riot or Marathon or CleanSpark over actual Bitcoin, just because the history shows they never even come close to outperforming. And it's not just Riot. I'm not hating on Riot. It's Marathon, it's CLSK, it's HUT, it's Core Z, it's all them. I'm ranting now. I'm sorry. What's up? Mentioned by hey, watch out for people impersonating me. By the way, I sell nothing. I have no course book. I'll never follow you, DM you. I literally sell nothing. Let's see. ASTS, please. Okay, you're right there. Ryan said risk reward. This is another what you're paying for the future on. So if we look at ASTS Space Mobile right here, they're at an all-time high right now. This is a space stock. If we go to their right now revenue, there's none. They're doing $1 million of revenue a quarter. But here's why the stock is rallying so much. Here's why the stock is at an all-time high, as it starts to make sense. So they're doing $1 million a quarter right now, but look at what the analysts expect next quarter. So the next 6 months should be extremely volatile. So buckle up, but check this out. Analysts are expecting 24 million next quarter, 32 million the next quarter. They're transitioning from a revenue-less company, again, $1 million a quarter, to some real sales. And it's really important they meet these expectations as a $26 billion company. But yeah, that's your space play. I kind of like Rocket Lab more. Run stock. Yeah. Hey, this is another kind of solar stock. A lot of the solar stocks have been momentuming higher, like all of them actually. But Here's why I wouldn't trust this one. 4.4, well, let me just go verify. So they're a $4.4 billion company. Let's hope they just don't. The thing is, all these solar stocks burn through net income. Let's go check. Yeah, so another one. Remember, the whole company is worth 4.4 billion. Look at that one quarter. They lost 3.4 billion that one quarter, but they lost 300 mil this quarter, 300 mil last quarter, 400 mil that quarter. That's like 8% of the company they lose every quarter. And this quarter it was 60% of the company. So it's just tough with these net income losses. But the reason I think the stock is rallying up so much because all the solar stocks have been momentuming higher recently. Can you show your portfolio? Yo, I have multiple portfolios. I don't know which portfolio you're talking about. I got the Webull portfolio. Here's my, I just love being fully transparent. I'll show you my lifetime return on every stock, how much I'm up and down on everything, my total performance lifetime of every portfolio. If you got any questions for me, let me know. Yeah, this one right here is my dividend only portfolio. So by the way, if you want to see my whole portfolio update, I make a bunch of YouTube videos and do stock portfolio updates on there all the time. So the number one way to support me, by the way, is just sub to my YouTube channel. I'm trying to build up my subscribers over there and my viewers over there. So YouTube channel called Nathan Robert, Linktree in bio, but just type in YouTube Nathan Robert. I'm streaming on there as well. If you missed anything, you can replay it. Someone said, what do you think about STZ earnings? You know who actually just bought ticker symbol STZ stock? Is actually the homie Warren Buffett. If we go to his most recent transactions, we go to increase right here. One of the stocks he increases position in is the fourth one there is STZ. This is Constellation Brands. That's actually a drink company, and they kind of deserve to be struck. They deserve this huge decline. But again, Buffett only buys a stock after he does his due diligence. So Warren Buffett sees the light at the end of the tunnel here. So yeah, if you look really quickly, that's what they sell. They own a lot of brands that you've probably heard of before, but here's why the stock is struggling. If you go to the revenue right here, the lifeblood, the sales of the company, the sales are down by 5.5% year over year. So that's not great. Sales are down by 5.5. And look how choppy the net income is. If we zoom out, you should be very consistent, a couple $100 million every single quarter. But recently for the past year, they make money, then they lost money, make money, they lost $1 billion. When you lose net income and you pay a dividend, you have a 3% dividend, it's really rough. So I can actually understand why this one's done so bad, but maybe it's all priced in. Maybe the risk reward looks good. What app is this? Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. Yeah, it's a free brokerage. Yeah, and you can track the super investors and stuff over here as well, like the Nancy Pelosi portfolio. You can batch trade, follow them into their positions if you wanted to. But yeah, these are just super investors. They have to by law make all their trades as public by SEC. Okay, let's keep going here. ALAB, yo, Ahmed, what up, dude? Astera Labs, this is a stock that deserves to be at all-time highs. Hood to the S&P 500. Yo, Adrian, you're a little late, my friend. Hood is already in the S&P 500. It got added I got added in the last month. But check this out right here. I like Enphase products. Enphase does have the nice AC to DC converters, but here's Astera Labs. I like First Solar. First Solar is the best play. Oh, closing cross. Market closes in 10 minutes, so it rounds up all the orders. Well, anyway, let's get back to Astera Labs right here. If you're ever wondering why is the stock at all-time highs, they deserve to be at all-time highs because of the growing fundamentals. If you look at the revenue, this explains it. The revenue is up 150% after it grew 600%, after it grew, an insane amount again. So the revenue, literally, these growth rates are insane. Just hits a new record every year, every quarter. And they're not just making revenue. They did 190 million in revenue, and they did 50 million in net income on that. They're usually losing net income every quarter, but now they're finally making real money. I think people are really starting to take this stock serious. And look at this absolute fortress of a balance sheet. Literally no debt at all. $1 billion of cash now, 1.07 billion of cash, up from 830 million. When you don't have to pay a dividend or anything and making all this net income, you can just retain it all. I mean, Astera Labs is a beast. They deserve to be at all-time highs. Is bonds good to have? As interest rates go lower, TLT will go up. It's literally an inverse. So when interest rates were at 0% in 2020, the TLT, the US 20-year Treasury bond, goes up. But as rates go higher, the price of the bond goes down, but the yield goes up. It's inverse. The yield goes up. Check this out right here. If rates are 0% at some point in the rest of your life, if rates are 0%, this will be at like $150 a share. So it literally, So that's why a lot of people keep their money in money market funds right now, where you get the 4% yield on your money market fund. But this is cool because you get the 4% yield and you get a bond appreciation. It's been tough to own bonds the past couple of years because there's been no clear rate cut path. But also, if we go over here, we can actually check the rate cut path, which is kind of cool. Go to markets right here. What tool are you? Yeah, if you want to get, I'm on a brokerage, by the way. This is where you buy stocks. It's a brokerage. If you want to get it, it's in the link tree in my bio, the very first link, that software. But check this out. If we go to markets right here, another cool little piece of info we get. Oh yeah, they also have the investment themes over here. If you like certain like themes you want to invest in, you could choose one on here. They have a bunch of different stocks you can choose from. But one thing I wanted to point out was the interest rate cut probability tracker. Where is this? Yeah, so look at this. On October 29th, there's literally a 95% chance of a 25 basis point cut. So literally in less than 30 days, rates are going to get cut by another 25 basis points with a 95% chance according to odds. Yeah, hey, Red Pill. It's in the, if you want to get this app I'm on, it's in the link tree in my bio. If you're on the YouTube stream, it's in the link in the description. So what's up? APP stock. Oh, that's what you mean. Or yeah, this stock as well. This is another company that also just got added into the S&P 500. Whoa, what just happened? Did this like just suddenly happen? What just happened? Let me go to news here. You hear all the, let's go look at the intelligent comments here. What's happening? Can we see what happened? AppLovin under investigation by the SEC due to data collection practices. Maybe that's the news. I don't know. I remember Meta is suing them for some sort of data thing as well. I don't know. But this is a stock that I'm actually going to add to the watch list. You know, I'm a fan of buying these kind of dips, but it's still way too far from reality from where I want to buy it. But check this out. This is why they deserve this is why they deserve the S&P 500 inclusion and to be at all-time highs. This is insane. The revenue's up 77%, but look at the net income. Out of that, 820 million of it was net income, and this wasn't some one-time adjustment either. They really did have a 65% net margin. So if you go spend $100 at this company on their ads or whatever, $65 of it is after-tax net income for them. It was already insane margins before today. You know, 40, 35% margins are insane, but to get to 65, that was a milestone. That's why the momentum just continued. I didn't believe it. And they're not just making net income, after-tax net income, but FCF, which is free cash flow as well. This is one of those companies with good growing fundamentals that totally deserves their high premium. So yeah, AppLovin's, I do like them, but apparently they're being investigated by the SEC. Hey, what up, Carlos? What up, No Bars? How's it going? Shiba Inu? Hey, we're not really looking at crypto on here. Sorry, I can't give you much thoughts on that. You know, there's nothing for me to look at. There's no earnings reports or anything, but that's also a cool feature about crypto. You know, they can't miss on net income. They can't miss on margins. It's kind of like a catalyst-free asset. AMD stock, yeah, we've seen a lot of news about AMD today because AMD got a huge order from OpenAI, and OpenAI is also taking a 10% stake into AMD. So basically, OpenAI is buying a bunch of chips from AMD. AMD's giving them 10% ownership, and also as AMD stock goes up, OpenAI stock will go up as well because AMD, or because they have those 10% AMD shares. And also, NVIDIA owns some OpenAI. So NVIDIA will go up from an AMD going up, which is kind of interesting. So we're in a very circular market right now. But that point being, there's no catalyst stopping this market. We could be in a bull market for a next, like through the end of the decade, a slow little bull market. Like I'm definitely biased. I'm trading America for the long run, but like, look at this. They have a 17% PC GPU market share. Obviously these estimates are going to get revised as OpenAI puts in new orders. You know, they're beating already every quarter on expectations. So yeah. Hey, what up? Tick Physic. How's it going? Let's see. Should I buy AMD now? I would not buy AMD now. But I can see why they've rallied up so much. Market closes in 5 minutes. Hold up. Let me see how the market's doing real quick. The S&P is up 0.79. Oh yeah. Falling a little bit as the market closed. Maybe following that AppLovin news. Tesla. Wow. Tesla's up 5.5. Hood's fallen a bit. SoFi's up 4.4. It's a mixed bag of a day. I think we're just barely green in this portfolio. Let's see. Yeah. Or no, we're actually doing pretty good. We're up 0.46. The Roth IRA is up 1%. All right. Thoughts on Open Door. Hey, this is another huge momentum name. So Open Door right here. This stock, there's also, the management has a Tesla CEO type compensation where if they get the stock to $30, there's like this huge pay package. But this is pure momentum. Like this is rallying on the hype of a lower rate environment. Because if we look at by the way, what this company does is they just flip houses. Quite frankly, based off their history, they're not very good at flipping houses. Their renovations aren't very good. I've seen some before. But check this out. In 2021, 2022, they were booming. The sales were insane, 4 to 5 billion a quarter. But look at what happened is rates hiked up in the same year. Sales fell 70, 69%. This is a super interest rate sensitive company. But as we go into a low rate environment, as we right now have a clear rate cut path. This one should do better, but I think they've over momentum this name right here. What is this app and can it be used in Canada? This app can be used in Canada, by the way. But if you want to get this app in Canada, it's in the link tree in my bio. You have to go to like the 5th link there. It's like get Moomoo in CA if you want to get this app for there. Yeah, this is a brokerage, by the way. It's a software where you buy stocks on. It's my favorite one. It's mainly to do analysis on. I have other brokerages as well. Like I have a Robinhood account. By the way, all the brokerages I'm using are in the link tree in my bio if you wanted to get any of these. But this is my favorite one right here for analysis. All right. Thoughts? Wait, SKYE is underrated. What is Sky? Sky Bioscience? Yeah, we're not really going to cover this stock. We don't really cover these kind of stocks in the channel. If you look at the top right, the whole company is worth $58 million and they're down 59% on the day. So we won't cover them. I feel bad if you own that one. I'd be super, super careful. Oh yeah. Hey, yeah. If you want to, again, sorry. If you want to get this app, it's in the link tree in my bio, the very first link there. But this is a brokerage where you buy stocks on. All right. Let's see. POWL. So, hey, wait, Powell. Hey, Devin, what up, dude? That's a stock I actually own in this portfolio. Check this out right here. So this is one of my best performing stocks. We bought all our shares on this day in January 2024, and they've just been doing great ever since. I've been through an absolute roller coaster. So I saw the stock go to 360 and then fall all the way down to 150, but now it's back up to 340 or 320. So I've been through a roller coaster on this stock. This is a really nice dividend growth company, or the dividend growth isn't there yet, but the payout ratio is so low, 0.3% expense or 0.34% dividend yield, 8%. Keep saying when I say expense ratio, payout ratio, they're making good net income. Look at this. They're making 40. The growth rates are first off really good. They're making 40 million in net income a quarter. They have no debt at all. There's so much I have to say about this stock. First off, they have no debt at all, 430 million of cash. So well over 10% of the market cap is just their cash on hand. And look at the dividend. The dividend literally only cost 3 million in net income a quarter. And they're making 30 to 40 mil a quarter. And check this out. Since they have a bunch of cash, since they literally have 433 million in cash, it's not just sitting there idle. They keep it in these 1 to 3 week treasury yields. They literally earn 3 to 4 million of interest a quarter. They literally make more interest this quarter than the cost of their dividend. Their cash pile's interest was more than the dividend cost. Isn't that nuts? Pretty cool. Sorry, people keep. Hey, I'll probably pin this comment. Yo, if you want, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a affiliate link. It's a software. It's a brokerage where you buy stocks on. Did you just add some super micro? No, I'm actually not adding super micro, especially at this price. I would not buy super micro at this price. NVTS or P. Let me look at PL right here. Is that Planet Labs? Let's see. Oh yeah. So this company is actually on a nice little rally. Check this out today. So the stock is pretty much at an all-time high. So first off, congrats if you own this company. You got to be up on your position. Let's see. Yeah, this was a huge beat on analyst expectations. So the analyst expected 66 mil. They reported 73 mil. They beat on net income and they beat on EBITDA. So it really was a triple beat quarter. I can see why they gapped up so much on earnings. Revenue's up 20. Again, that's a huge beat from what the analysts expected. They narrowed their losses too. So they're just beating on expectations. What happened to Docu today? I think what happened to it? They're up 3.5%. I think it's just a normal day for them. I did hear some news that maybe DocuSign partnered with some other software company. I don't remember, but yeah. You mentioned trading. Aren't they only available? I'm not sure what that. Oh, you mentioned OpenAI. Oh yeah, you can't buy OpenAI stock. Yeah. I had a job fixing an open door house renovation once. Crap work. Oh man. Does this app work in India? I don't think this brokerage is available in India or in Indonesia. You can test it though, but I don't think it is. So let's look at MELI. I think that's like a South Asia. Oh no. What did I just click on, bro? Did I click on Oh my goodness, bro. I just actually logged out of my account. I don't know what I just clicked. That's actually depressing. I actually have to go log back in, but I can't. It won't let me log back in while sharing my screen. That actually is a huge kick in the nuts. Okay, I don't know how I just did that, but anyway, we can check this out right here. We can go to our portfolio right here. Oh, the market just closed. It's 401. Literally, the market just closed. We're up 0.47. Yeah, Apple Oven did fall today. Hold on, actually, let me go. Let me go log in. Hopefully, I know my login. I'm so sorry. By the way, if you guys want to hit the follow button, we stream every single day, sometimes twice a day, and also I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you. I'll never DM you. Please watch out for people impersonating me. I don't sell anything. So anyway, yes, people were saying, look at Apple Oven. Apple Oven is being investigated by the SEC for data collection fraud or something like that. Let's see. Yeah, look at that. Apple Oven sinks 50%. Says it's been probed by SEC. So that's not great. This is a good quality fundamental company. All right. Good thing we got our phone back up pretty quickly. Hood is in a little dive, more like a correction. Hey, what up, Maddie? Good to see you, friend. Yeah, Robinhood stock right here. Yeah, they're down 3% on the day, but they hit the same day they hit an all-time high. They hit an all-time high today, but also fell a little bit today. So I'm not worried. Do you have a YouTube? I do, Temptations. Yo, by the way, that's the number one way to support me. The best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you just type in YouTube Nathan Robert. I'm also streaming on there. If you missed anything and want to replay it, sometimes I talk too fast. I'm sorry. You can replay it on the YouTube stream. And a lot of people like to replay it. And if they missed it, comment the stock and I'll look at it on the beginning of the next stream. Anyway, here's Robinhood. This is, this brokerage right here, publicly traded. I've probably given them a lot of transaction fees and stuff like that. But Robinhood isn't at an all-time high because they're trash. They're at an all-time high, or just from momentum, they're at an all-time high because they're really good good growing fundamentals. We can see their net cumulative funded accounts. That's a metric you really want to look at. Their cumulative funded accounts are 26.5 million, up from 24.2 million. That's really good. If we look at the revenue, it's up 45% after it grew 40, after it grew 52. Like, they're on a streak of growth. And look at this. The revenue was 980 million. Out of this 980 million of revenue, legit 390 million was after tax net income. They have insane margins, 39% net margins. So Robinhood is a stock I really like. I might be biased. I do own them, but yeah. Oh yeah, let's get back to MELI right here. MELI, my bad. So this is Mercado Libre or something like that. This is basically like the oh hey yo. Shout out to Ron right here with the 25 or Maddie with the 25 Ron. Dude, thanks so much, my friend. Hope you're having thanks for the coffee. I really do appreciate that. So here's Mercado. This is basically Amazon, but in all these other countries. So check this out. Or the South America Amazon. 55% of the revenue is Brazil, 22% Mexico. And look what they do. They're in commerce services and they're in financial services. How's that doing? Credit revenues, commerce product sales. So yeah, let me go to the revenue. It's been growing nicely. Revenue's up 33 after it grew 41. And they're making, their margins did kind of fall, but they're still making 400 to 600 million net income a quarter. Yeah. Still good. I like that. I wonder why they're falling recently. Look at that. I had a downtrend the past couple of days here. Hey, what up, Gilbert? What up, NB? Hope y'all are having a great Monday. What up, James? You said Chipotle stocks. Yeah, if we look at a lot of the food companies right now, a lot of the food stocks are in trouble. Hey, X-Tick Sidekick, thank you so much for the 23 roses. If you got a stock you want me to look at, let me know. But here's Chipotle. We've all probably heard of them. They're one of those restaurants. And one reason why I'd wait to buy the stock is because I think there's still room for them to go lower, sadly. If we look at their PE, which is net income multiple, they're trading at 36 times net income. Industry average is 27. They're trading at a high multiple, and they kind of just lost their growth. And, that's why they gap down so aggressively on earnings right here and then continue to fall after, because this is a high PE company expecting high growth, and look what they did. Analysts expected 3.1 billion in revenue. They only reported 3.06 billion, so they had a big miss on revenue. So the revenue is only up 3%. That just barely beats inflation. 3% revenue growth on their sales, but The net income actually declined by 4% year over year. So that actually means the margins did fall a bit. Net margins fell by 7%. But again, this isn't a Chipotle problem. It's the whole industry's problem. You look at Wendy's, for example. Wendy's stock has fallen off a cliff. Wendy's is the same price that it was in 2004. Krispy Kreme, DNUT stock, all-time low on Krispy Kreme, unfortunately. So they're only worth 600 mil. First time having a swell. Happy and lucky to bump into you. Looking forward. Hey, that's very cool. Thanks so much, Gilbert. I appreciate that. Let's see. MA stock. Yo, that's MasterCard, right? Yo, yeah, this is one of the two payment processors. They're basically a shared oligopoly, MasterCard and Visa. Anytime you spend money, those small little credit card transaction fees that are slowly bankrupting us are making MasterCard a lot of money. If we go to their net income right here, they print money. I mean, 3.7 billion in net income every quarter, and it grows every quarter. You also get a nice yield, a 0.5% dividend yield, and they do share buybacks. That's the main highlight here. If we see the net income's up by 13, but the net income per share is up by 16 because the share part of the ratio went down by 3%. So you can also just see the share buybacks by going to the cash flow statement, scrolling down here, and net common stock issuance. And as you can see, it's negative. So that means they're retiring 2 to 3 billion of shares a quarter. It's crazy. Very shareholder friendly company. I do like that. That's a good just buy and never sell stock. Don't really trade them. Just buy and never sell. Do you think XRP is going to go crazy? Oh, hey, well, I don't know much about XRP. Someone said SHLD. That is the Global X Defense ETF. So yeah, if you're looking for an ETF, which is like a basket of stocks, this is an interesting one. They're at an all-time high right now. So first off, congrats if you own this one. A lot of the aerospace and defense names have been on fire. Palantir is a big defense play. Rheinmetall, Raytheon, BAE, Lockheed Martin. I love Northrop Grumman. These are all, and this one has a nice yield too, even at all-time highs at 1.4 yield. I really like that ETF. I just like that industry. Some of the valuations might be a little stretched though. Wait, is this another ETF? Andrew said ARQQ. Oh no, this isn't an ETF. I thought that was the AR robotics ETF or something, but this is Arbit Quantum. Yeah, a lot of the quantum names have seen some crazy momentum, so it's probably just following the momentum of the other names. Let's see. Do they have revenue though? So here's the thing, and this is why you want to be careful trusting these names with like a lot of money. Like the revenue for this half of the year, like for the past 6 months of 67,000 of sales for the past 6 months is terrible. Oh no, are they? Yikes. So look, they're losing a bunch of net income. That money's got to come from somewhere. So look at how their assets and their balance sheet just slowly have declined. Fundamentally, financially, I wouldn't touch that one, but from a momentum point of view, maybe. All right. All right, let's see. AMSD stock. Hey, what a big topic. Said all these unemployed kids in America on YouTube losing money stocks. AMSD. What is this? AMSD. I can't find AMSD stock. Here's an. Can you check NU? Yeah, let's go check out NU again. So this is that crypto bank out of Brazil. If you kind of want exposure to crypto, this is a cool way to get exposure to it. They work in Brazil where their currency sucks, and so people are using crypto down there for transactional purposes. We don't really do that too much in the U.S., but down there in Brazil, where the currency is not good, that's the market to be in. So I'm not just recommending them because of that. I'm recommending them because of the good growth. If we look at the revenue's up 28% after it grew 52, after it grew 61. So they're on a growth streak, and they're not just making revenue, but real after-tax net income. We've converted the currency to USD. They're literally making 500 to 600 million of net income every quarter, and it grows. The growth rates year over year are insane. So NU's a cool one. And they're investigating in this XRP. Oh, that's cool, Chris. Yo, that could be a cool catalyst or something. American Superconductor. Oh, wait. It's AMSC. Okay, AMSC is the ticker symbol. So yeah, this is actually a really cool stock that I think that deserves to be at all-time high. Brazilians are sending money to the USA, including, oh, hey, yeah. So that's cool. So here's American Superconductor. They're a $2.75 billion company, and they're at all-time highs right now. Here's why they kind of deserve that. Check out the growth. It's finally back. The sales are up 80% year over year. after growing 33. But look at this. Out of the 72 million in revenue, they're actually profitable. They're making a couple million net income every quarter. The year-over-year growth rates are very strong. They just beef up their balance sheet, I think, by issuing shares. Yeah, they issued 120 million shares, but stock didn't mind because they're beating like crazy on expectations. That's why they're gapping up so much in their actual earnings day, because analysts expected 64. Well, they reported 72. And analysts expected 5 cents of EPS. Well, they reported 17. So that's why the stock is going up so much. Again, here, I saw the stock a few times. This is complete garbage trash. I don't know where people are finding this ticker symbol from, but here's the thing. If you look I'll just show you the numbers for yourself. The top right, the market cap, this whole company is worth 33 million. So if you wanted to, you could buy this whole entire company for $33 million. Let's say you buy the whole company. Here's what you own. You literally are buying a business that in the past 3 months lost 12 million. The previous quarter lost 16 million, then lost 12 million. And look at this terrible balance sheet. Like, they have way more liabilities than they do assets. So do they have sales even? No. Look at the sales. They're down 97% year over year to $9,000. I mean, I'm sure someone in here made more than that. So to trust that one, I don't see it from a fundamental. To swing trade it, maybe, but I like swing trading and doing options on companies with fundamentals I can trust. So yeah. So Secular, what up, dude? He said HNST. Yo, there's some not so good news about the stock. They're up 8% on the day. Let's go. That's pretty good. But here's the thing that scares me a bit. First off, they are really tiny, $440 million, but they're just not as growthy as I'd like them to be. If we look at the revenue, the sales, the lifeblood of the company, the revenue is only up by 0.44. That doesn't beat inflation, 0.44%. So we kind of want to see the revenue growth come back. But, they just sell a commodity. They just sell diapers and wipes. But there is good news that they are making a few million net income a quarter, because it's usually pretty choppy. But it looks like the past 2 quarters have been a little bit more consistent. They have no net debt either. I think they have like 40 or 50 million in net cash, which is like 8 to 10% of the market cap. So hopefully that was helpful. I just really want to see the growth come back to the sales, Let's see. Adobe, please. You know what? We'll look at a few more here, Adobe. Then I got to run. By the way, if you want to hit the follow button, we stream every single day, sometimes twice a day, and we just look at stocks. I sell nothing. I have no course, book, WhatsApp. Watch out for people impersonating me. I'll never follow you. I'll never DM you. Nothing like that. But here's Adobe right here. This is one of the software names that are really being hurt by the AI thesis, because they're saying ChatGPT might replace Photoshop in 10 years from now. Will we need Photoshop in 10 years from now is the question. And that's what's being priced in. But I think they've overpriced it in. Like, the valuation it's really cheap at this point. I think honestly right now at this price, it's worth nibbling on, buying a little bit here. I wouldn't trust a lot of money in this one though. I wouldn't have it as like a huge position. I wouldn't have it, more than a couple percent of the portfolio, but I think it's worth nibbling on as a little fun size position. And I have a bunch of fun size positions like Axon, Toast, Calmain, Rumble, Clear Secure. I put a little fun money in them, a couple $100, because I like it. I can believe the thesis. I really think it could go up 30%. But I don't want to have that much money into it because I don't believe in it that much. But yeah, check this out. They print money right now. It's the future uncertainty that's hurting their multiple and hurting on their stock price. But for right now, the numbers are good. They're making 1.7, 1.8 billion in net income a quarter, and they're spending most of that on share buybacks. Net income's up by 5, but net income per share is up by 11. They literally own 6%. You own 6% more of the company than you did a year ago. That's crazy. Kraken Robotics. Hey, what's the ticker symbol for that one? Bruh said OBDC is a good stock. Well, this is a income asset. So wait, OBDC, I think that's Blue Owl. So yeah, you buy this to maximize your dividend income. This IPO'd in 2019. It IPO'd at $16. Now it's $12. It's lower than it was 6 years ago. But here's why a lot of people like this stock. It's because of the huge yield. You get a 13% dividend yield that's actually sustainable, because this is a BDC, which is a business development company. And literally by law, they have to pay out 90% of their taxable income in the form of dividends. This is one of the better BDCs out there. There's some definitely more trash ones. This one has good growth. Revenue's up 22. Profits are up. So they're making it. But I don't see that outperforming, the S&P 500 in the long run. But yeah, it's a nice income producing asset. That's a BDC. They're one of those companies that, again, have to pay out most of their income in the form of a dividend. So whenever you receive those dividends, they're taxed as short-term capital gains. I picked up their competitor. I actually picked up Main Street Capital. That has a little bit better stock price appreciation. Again, I don't expect this to outperform in the long run, but I get a monthly dividend, a monthly 6% dividend yield. And sometimes they make so much, they pay twice in 1 month. Peter, he said Rivian. So this is that electric vehicle company. Has anyone ever seen like those electric Amazon vehicle delivery trucks? They're really cool looking. Like I want to drive one, but this stock might not be investable, I think. Because if we go to, or it's tough to trust a lot of money in them. Because if we go to their net income, like I just don't love money losing companies. And this is a super CapEx intensive business. Like they literally lost $1 billion or 1.1 billion in net income just in the past 3 months. And then 500 million, 750 million, 1.1 billion. So in the past year, they've lost 3 to 4 billion. It's a tough, like we really want to see these narrow at a much quicker rate. But they're this is the good news. They're backed by Amazon and Porsche. Amazon owns 13% of all the shares. So I have some exposure to this stock, and Porsche owns 12% of all the shares. So my exposure to it is just via my Amazon position. It could be a potential takeover. Amazon could buy the whole company in the future if they really nail down their robotics and EV. So yeah, what apps do you use to trade? Yeah, hey, if you want to get any of these apps I'm on, they're all in the link tree in my bio. Yeah, I got all these brokerages here. This is my favorite one though. Link tree in bio. The very first link is the one I'm on right now. They're all affiliate links too. Full disclosure. Taiwan Semiconductor. TSM, right? So yeah, Taiwan Semiconductor, this stock deserves to be at, wow, they're up 3.5% on the day. They deserve to be at all-time highs. And the valuation isn't even, well, it's 33 right now. Anyone else remember coming on the stream when they were trading at 25 times net income? Like, and you get a 1% yield. So like even now, they're not ridiculously overvalued. They have a 1% dividend yield. NVIDIA just designs the chips. It's actually Taiwan Semiconductor that manufactures and makes them. So you get a 1% dividend. It's like an exposure to NVIDIA with the higher yield and a huge market share for these like 3 nanometer wafer chips that are in everything, like your car window, your washing machine. They have a 67% market share. And look, this is the best part though, the growth. If we look at the revenue's up 55%. Revenue's up 55, but net income is up by 79, meaning they're expanding margins. I can't believe this. 42% net margins every quarter. They're making over 10 billion of after-tax net income a quarter. And this isn't some one-time adjustment. Like this is real, the money they make. Deleveraging their balance sheet, 1% yield, doing buybacks. I mean, they're a beast. They're a beast. Hey, we just looked at Open Door like just a few minutes ago. I don't want to cover them again or for a little bit. So USAR. Okay, so yeah, this is another one of the US rare earth mineral plays. If you look at like an MP Material, an LAC, this could be like the next stock, or next domino to fall almost. Got a YouTube video on how to analyze a company's financials? I do, and I made it like a month ago. Yeah, hey, by the way, I have no course or I have no course or book where I teach anything. I sell nothing. The only thing I do have is a YouTube channel, and I have a video I made a month ago. It's like, oh my goodness, dude, the perfect time for TikTok to take down the stream. Okay, sorry. I just had to fill up a CAPTCHA on TikTok proving I'm not AFK. So hopefully I didn't get cut out, but best way to support me is subscribe to my YouTube channel. It's called Nathan Robert, link tree in bio. Anyway. And I have a video on how I analyze a company. It's like one of my most recent 10 videos. You'll probably find it. But here's USAR. It's another US rare earth mineral play. And I think there were some talks of the White House, again, the government, like taking a stake into this business, just like they did with MP Materials. This is another USA rare earth mineral play. Like the USA wants to be more, independent, rare earth mineral independent. And the government took a stake in MP Materials because they're opening up this one mine that literally supplies certain rare earth minerals to the US for the next 50 years. So it's pretty cool. You check out POOL. You know who's buying Pool stock? You know who's buying Pool? Is the homie Warren Buffett. So if we go to the Buffett portfolio right here, we go to his most recent changes, we go to increase in position. That's the stock he increased the most. So ticker symbol POOL, they have a monopoly on the pool distribution network. Like they literally make, out of all the pools, like 80% of the parts are most likely made by this point. And you have contractors come and like service your pool, but they order all the parts from this stock right here. I forget their market share, but it's like over 50%, largest market share. And the reason the stock has been struggling is because of the high rate environment. People really aren't spending on houses and pools like the home builders are seeing this same decline. But check this out. I actually really like this name for the dividend too. You get a 1.6% dividend. That's a very nice yield on pool. They trade at 28 times net income. Um, and yeah, again, the growth is slow because of the high rate environment. Like the revenue is only up by 0.8% year over year. And all the other quarters, it's negative year over year. So we do want to see the growth come back, and we're hopefully in a lower rate environment, we will see that. The net income was good though. They made 194 million net income. Let's see how much the dividend cost. The dividend cost 45 million. So they actually have a lot of room to raise the dividend. And since they have a bunch of leftover money, they actually spent $100 million this quarter on share buybacks. 50 million last quarter, another 150 million. They're spending over 100 million a quarter on buybacks. They're spending twice as much on buybacks than the dividend. So you get a 1.5% dividend and a 3% non-cash dividend via share buybacks. Pretty cool. Hey, what up, Endless Teas? How's it going? So, hey, Applied Materials, let's do that one. AMAT, QXO is going to be a 10 bagger. Hey, that's like I don't think so, but that's just like a boring roofing kind of company. But QXO is interesting. Uh, I don't really expect that one to be like so growthy just because of the industry. But here's AMAT, Applied Materials, a $180 billion company trading at 26 times net income. So that's actually a pretty fair multiple. They're a semiconductor play. That's 75% of their sales. And yeah, out of all the semiconductor stocks, this one's at a pretty fair multiple, trading at 26 times net income. Looks like the industry average is 32. So they're trading at a lower industry average. Let's see if we can figure out why. Are they slower growth? So yeah, this is why. You look at AMD, NVIDIA, Broadcom, Taiwan Semi, the growth is insanely higher. It's more, this is mid to high single digits. This is single digits. I kind of want to see more growth, but that explains why the multiple is lower than the industry average, because they're not as growthy as the average in the industry. But they're making good money, 1.5 to 2 billion in net income a quarter, and you get a near 1% dividend. And I think they have a really good balance sheet as well. Yeah, pretty decent balance sheet. They deleveraged by 1% year over year. So yeah, that one's done good. I know Micron's doing really good as well. Safest brokerage to use where you can't block you out of your money. Well, that should be just any brokerage. No brokerage should be able to do that. But if this is my favorite brokerage. If you want to get I have a bunch of different apps here, but yeah, if you want to get my favorite one, it's in the link tree in my bio, the very first link there. Qubits is a scam. All quantums are. Yeah, well, the quantum stocks are definitely in a bubble. Like their valuations are nuts. Like absolutely nuts. Like Qubits, IONQ. Actually, IONQ is probably the best quantum play because IONQ just did something genius. They diluted the shareholder by $1 billion and just bought a good company for $1 billion. So they actually have some real assets, unlike some of these other quantum names. But anyway, here's IREN. This is your data center hosting company. They used to be a Bitcoin miner, then they converted into a huge server server company. So check this out. If we look at the sales, if you ever look at a stock and you see it at an all-time high, up 14%, it's usually explained by just looking at the fundamentals. If we look at the revenue's up 230% after it grew 104. And out of this 187 million of revenue, look at the net income. They made net income the past 3 quarters when they used to lose money. The assets are growing every quarter. So everything fundamentally and financially is headed in the right direction. So I can see why they're at all-time highs. I wouldn't buy them here though. They're like a smaller version of CoreWeave. Someone said wait, where was that comment? EME is a beast of a company. Yo, Oliver, EME is the exact same thing as Comfort Systems. Actually, let me add that on there. These two companies right here move pretty much exactly the same. Just Comfort Systems has moved a little bit better. But yeah, these are your two HVAC plays, heating, ventilation, air conditioning companies. I chose Comfort Systems over EME, but EME did just get added into the S&P 500. We bought the dip on them down there. Also, another cool thing about these HVAC companies is how they kind of follow whatever Bitcoin's doing, because a lot of their growth recently has been from Bitcoin mining rigs that don't want to water cool. They just put the cooling pipes right into the server rack. So yeah, I've noticed they kind of like Bitcoin and the HVACs kind of rhyme together how they move. Pretty interesting. All right. Any covered call funds you like? I mean, there's some interesting ones like SVOL. This one sells calls on volatility. Still not enough to make me own it in my situation. Like if you plan to retire in 10 years, or even longer, you're shooting yourself in the foot by a covered call ETF, or even like an SCHD or something. You really want to focus on the tech-heavy compound growth stuff. I'm learning what to buy. I ate it bad with Quantum. Yo, the thing is, if you're in Quantum right now, I bet you're really happy because all the Quantum stocks are on fire. So, in my opinion, if you're in Quantum, not financial advice, of course, I would probably trim out. I'd sell out a little bit, but there's a, yeah. Do you have a video on fundamentals for beginners? I do, random guy. Yeah, if you go to my YouTube channel, I have a video. It's like how I analyze stocks. I made it like a month or a month and a half ago. Someone said CMI Cummins. Yeah, this is your vehicle engine company, and they are an incredible dividend growth company. If we look at their dividend right here, even though the stock is at all-time highs, you still get a 1.66% dividend. The dividend rate, they raise it every year faster than inflation. They're trading, even at all-time highs, they're trading at 20 times net income. That's pretty fair. They're very diversified, distribution, engine, components, power systems. How's that doing? Power systems, look at that. It's up 18% after going 9, after going 98. Wow. So anyway, that's just one little business for them. If we go to their net income right here, yeah, good net income. Basically 500 million to $1 billion in net income every quarter, plus the good yield. So that's a nice dividend growth company that even though they have a nice yield, the stock still grows as well, kind of like United Rentals. Roblox stock. All right, we'll look at that one. Is like one of the last ones here. So Roblox, that's, who owns that? It's actually Kathy Wood. That's in the Kathy Wood portfolio. She kind of has lost a lot of respect because of her ETFs have underperformed like crazy, but Roblox stock is this right here. And it's like that game, if you've heard of them before. We get some cool metrics, like we can see their daily active users. That's a cool metric. Their daily active users is 111 million, when the same time last year it was 79 million. So the daily active users went from 79 million to 111 million. There was one you mentioned the other day on your watch list that started with a K. I wish I knew which one that was, Realm. Oh, I don't know. Here's and I'm usually good at remembering that kind of stuff. Here's back to Roblox though. Here's why I couldn't buy Roblox. Like, first off, their growth is good. Beat expectations on growth. Top line is beating. Daily active users is beating. Let's hope it's not AI numbers. But this is the bad part. They're losing over 200 million in net income a quarter. Like, they lost 35% more than the previous year. So they need to really trend toward profitability. They also don't have a great balance sheet, nearly the same amount of liabilities as assets. So I don't love money losing companies. Just the fact that they lose 200 mil a quarter is tough. So yeah. What do you think about yield max ETFs like MSTY? Yeah, these I never recommend, especially if you don't need the money. If you're very far away from retirement, you never want to touch these. It's honestly, like, sadly, it's a slow bleed of your capital, especially the yield max and title trust ones that do the return of capital and the NAV erosion and the high expense ratio fees. Like, a triple compound, like, kicks you in the nuts, unfortunately. Like, you can just see that this ETF is pretty much at an all-time low. You're buying this to maximize your income, though. If you look at the dividend, you get 180% dividend. That's completely not true. The dividend trends down double digits every year, and as the stock goes down, it makes the yield look higher. But since they're returning capital and the erosion, the dividend income you receive, you can't rely on this as a dividend income asset, I think. It won't be reliable and sustainable as you might think it will be. You just will, your income will go down every year, in my belief, by double digits with some of the more unsustainable ones. And you already don't outperform the 8% CAGR of the SPY, and you're paying a 1% expense ratio. It's tough. We'll look at one more here. Eric, hey, what up, Jeremy? Yo, hold on. Maybe we'll look at FLY as well. APLD stocks. So APLD is a company actually in the NVIDIA portfolio. NVIDIA is so big, they own some individual stocks. And one of the stocks NVIDIA owns is APLD. And this company has really benefited from being basically in the NVIDIA ecosystem. APLD just got through a huge partnership with OpenAI. Or wait, no, CoreWeave and APLD went to a huge partnership. Yeah. So basically, this is a data center hosting business. I used to break it down, actually. Let me actually see if I can go find that. So yeah, look at that. Data center hosting is 57% of the revenue, and then the other half is their cloud service business. So yeah, there's APLD for you. And NVIDIA does own them. I wouldn't just buy a stock because NVIDIA owns it. Go do your own research on them, but I wouldn't touch that one right now. How to learn and open the account, still starting to sell. Oh yeah, hey, if you want to get this app, if you want to buy stocks, you need a brokerage. This is my favorite brokerage to buy stocks on because you can actually analyze the company. It's in the link tree in my bio, the very first link there if you want to get it. I also have Robinhood. I have this other brokerage, but you can't really fundamentally analyze a stock here. Like it gets the job done. You can buy a stock on there, but I love all and also with Robinhood, you have to pay $5 a month to get the 3.75% APY. Like your idle cash will earn a 3.75% APY, but you have to pay $5 a month. Not with this one. There's no monthly fees. There's zero commissions. Lowest fee brokerage right here, in my opinion. I keep my idle cash in here because there is no monthly fee. It earns a 3.85% APY. Anyway, yeah, if you want to use it, get it. It's in the link tree in my bio, very first link there. It's a brokerage and it's an affiliate link too, full disclosure. So if you deposit $100, we'll both get some free stocks, which is kind of cool. And you can see all the super investor portfolio. And someone said Coca-Cola stock. What up, Tom? Yeah, you know what? We'll look at Coca-Cola as well. If we go to the Warren Buffett portfolio, 8.7% of his portfolio is in Coca-Cola. And this is a nice dividend stock right here. If you're just looking for a reliable dividend payer, this might be the one that might interest you. Because you get a 3% dividend. They raise it every year to keep up with inflation. But again, that being said, I don't expect Coca-Cola to outperform the tech-heavy S&P 500 in the long run, but you still should get a good maybe 6 to 7% money back a year, 3% from dividends, 3% stock price appreciation, maybe 1% in share buybacks. And look at this. They're making good money, $2 to $3 billion a quarter, and they just share it with you via dividends. So cool. Coca-Cola, again, one of the reasons why Coca-Cola is struggling because the whole food industry is struggling right now. You look at General Mills, Chipotle, Wendy's, all of them are struggling. So, all right. Would you buy any stock right now? Would you recommend? What up, Eric? So there are a few stocks that actually, markets at all-time highs. It's tough to pay. If I look at this watch list right here, or my stocks right here, I wouldn't pay near any of these valuations. I wouldn't pay for SoFi's current valuation, Robinhood's, AMD's, no. AMD had a great day today. AMD's up 25%, but Reddit's wouldn't pay it today. Supermicro definitely wouldn't pay it today. There's a lot of companies I totally wouldn't pay at today's current valuation, but there are some that I would, and I've made the wrong decision on, like Sprouts Farmers Market. If you're looking for a healthy grocery store, Sprouts Farmers Market's one I own 9 shares on. I am down 23% on them. But I'm not recommending them because they're down so much. I'm recommending them because they have good fundamentals. Another one, and this will probably be the last stock we look at right here. This is an incredible company, in my opinion. This is Progressive stock. Again, I'm recommending them because they have good fundamentals that I'll share with you right here. So this is that insurance company. Again, I'm probably biased because I own 4 shares of them, but check this out right here. This is why I love them. If we look at their main business, their personal lines, check this out. Revenue's up 20 after going 29, after going 22, after going 6. The growth is insane. If we could look at it on an annual basis, this is the trend you want to see. Just hits a new record every year, every quarter. And it's not just the revenue that's growing. Because if you look at the revenue's up 21, but the net income is up by 117. They're printing net income. And what's cool about this stock as well is that they do a yearly special dividend to reward the shareholder. So normally you only get paid 10 cents, 10 cents, 10 cents. But every January, right after Christmas, they pay you a special dividend. It was $4.50. And with their new record-breaking profits, I think there might even be a higher special dividend next quarter or next Christmas. Just kind of coming up soon. So this is a buy and never sell dividend stock, dividend growth company. They have so much room to raise their dividend. So yeah, dang, yeah. Okay. Fly stock, why TAP not? And yeah, hey, TAP, in my opinion, just has better financials, better fundamentals. Ticker symbol TAP over BUD. But here's FLY. This is Firefly Aerospace. Yeah, dude, my phone is lagging oh my goodness. My phone's getting low here. So here's Firefly Aerospace. Wait, it says, what is this right here? Firefly Aerospace announces strategic acquisition of SkyTech. Interesting. So that should bring some more growth because this is kind of a revenue-less company. Not revenue-less. They did $15 million in revenue. Did fall 26%. And they have a lot more liabilities than they have assets. I think this is some sort of drone play. Space launches. All right, yeah, so that's Firefly Aerospace. I wish I could give you more thoughts on that, but that acquisition looks pretty interesting. Maybe you could look into that more. But anyway, I hope you guys have a great rest of your Monday. I'm going to end the stream here, but by the way, watch out for people impersonating me. I sell nothing. I have no course, book, WhatsApp, I'll never follow you. I'll never DM you or follow you. But if you do want to support me, the number one way to support me, like means more than donating to me, is subscribing to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. And I'm trying to build up my viewers on there. Like I have 360 viewers on TikTok and I only have 39 on YouTube. I'm just trying to build up my stream over there because I barely get any videos on my YouTube videos. So hey, if you want to help me out, sub to the YouTube channel. Go leave a comment. Say you came from TikTok. And I hope you guys have a fantastic rest of your day. By the way, we stream every single day. I stream every day at this exact same time. If you want to hit the follow button, hit the notification bell, subscribe button to get notified. See you later. Wow, dude, I can't believe this, guys. Sorry I wasn't reading the YouTube chat too much. Dude, we had like 400 viewers the whole time on TikTok. That's my best stream in history. I've never even had a stream come close to that sort of performance. All right, I guess, all right, y'all can kind of see the stats here. That's kind of cool. Yeah, this is insane. Anyway, I'm going to go. Thank you, everyone who showed up to the stream. This is my biggest stream ever. Thank you. If you want to hit the subscribe button, we stream every day this exact same time. Hey, Catherine, what up? Sorry, I just ended the stream. See you, B. Dot. Have a